Relations with the EU are set to crash through an informal deadline this weekend. Welcome back to the second hour of the European Market Open, getting us into gear for that European Market Open. You can see that futures are down, and in fact increasingly negative as we've gone through the last hour or so. US futures also point to the downside. NASDAQ futures down 0.4, E-mini futures down 0.6. So certainly the expectation is that the rally we saw earlier on this week, all to do with the Pfizer-BioNTech vaccine, that is stalling just a little bit. That is retreating just a touch. And we're all pausing to think about the winter that lies ahead before any effective mass vaccination anyway. So this is what we've got for you at the start of the European equity trading session. The FTSE 100 down by around 0.5%. So there was an expectation, as we showed you there on futures, that we would be negative. And we've seen to some extent that either negativity or stalling coming through in Asia. Asia actually cushioned by a rebound in some of those big Chinese tech names that we mentioned in the headlines. So this is where we are at the moment then. The CAC 40 down by 0.9%. The IBEX, it's been moving more than other markets in recent days, but it's sort of in with the pack today, down by around 0.8%. So we are seeing these moves to the downside for European equity markets. The pound under pressure, as you see there on the GMM screen. We got some GDP data earlier on this morning, which added to our clarity on the rebound in the third quarter, but still raises important questions, of course, about where growth goes in the fourth. Now, European markets then open lower. This as the week's global stock rally shows signs, as I said, of stalling. Joining us now is Emma Daly, Macquarie FX strategist. Emma, good morning to you. Given what we saw earlier on this week and the huge amount of risk appetite evident in markets then, how much risk appetite do you have at this point, Emma?
Yeah, I've got to say I'm pretty bullish about the global growth story and the recovery. I think we're always kind of bound to see a little bit of a retracement, although we had a lot of that kind of initial exuberance. I remember the market is trying to digest a number of stories. So yes, we've got a Biden presidency, but he's constrained by a Republican Senate. We've obviously had the prospect of a really effective vaccine coming through, but at the same time, Europe and America is caught up in the second wave, rising case counts and death numbers. So it's really the market trying to weigh up which is the defining narrative. And I guess from our point of view, we really think the prospect of a vaccine and economic reopening will kind of win out and is going to set a much more optimistic trading environment into next year.
That's interesting. And does that mean downside for the dollar then? Because the dollar seems to be pushed and pulled by a number of factors at the moment. For a long time, the narrative had been around the US election and what fiscal stimulus was going to come through. That seems to be, well, that certainly lacks clarity until we know what happens in the Senate. And then in the wake of the news around the vaccine, that started to be the factor driving the dollar. So what is driving the dollar for you at this point?
Yeah, it's interesting actually in trading today that we've seen the kind of link between US yields and the dollar breakdown. Because that had really been the kind of dynamic that was driving it over the last few days. And we do think it's kind of classic risk on, kind of much more be driven by rallying equities, by commodity prices. So we are looking for a weaker dollar. We have the most conviction against this high beta, commodity related currencies. We do think we'll see the reemergence of, those kind of yield plays, people looking for carry into 2021. Where I'd have kind of less conviction is euro dollar and those kind of currencies which are most driven by interest rate differentials. But I think we have quite a clear framework for kind of positioning into emerging market high yielder currencies.
Do you think markets are going to wait for clarity around the fiscal stimulus in the US? I mean, some Republicans have been pointing to better data and suggesting that means we don't need quite so much fiscal stimulus. What is the market looking for? What is the market pricing in terms of that fiscal boost as we look ahead into 2021?
Yeah, I guess the annoying thing for traders is that the market has been almost so optimistic that some kind of fiscal stimulus would come through. I guess that we are in that kind of game changer stage where if we have a vaccine and we can economically reopen, where does that leave policy? You know, both on the central bank side and both on the fiscal side. So to be honest, I think, you know, intraday markets have been caught up in this, you know, will they, won't they fiscal stimulus? What's going to be the final number? But I think if we see a vaccine being authorized and distributed, I think that's the game changer. We should see a much more positive equity environment, and to some extent, fiscal stimulus really takes the backseat, and we look forward to economic reopening, kind of where industry lies after the virus.
Emma, some commentators, some investors are nervous perhaps about what President Trump might do in the final days of his presidency to try and perhaps shore up his legacy, but maybe also to make waves. Are there risk factors you're looking at, trade with China, for example, other areas you're focused on where you could see him still presidency by Twitter moving FX markets?
Yeah, I think obviously, you know, trade is the really key thing there. It's where he has kind of the most executive power and can cause the most disruption. Saying that, I think probably his focus is on contesting this through the legal courts. So it's more the uncertainty that comes from that. Also, I think markets will slightly shirk it off. He is the outgoing president. And a lot more attention is going to be given to, you know, comments and tweets coming from President-elect Biden.
Do you think havens then have had their day, Emma, given how risk on you are going into 21, how you do see the positives at this point? The Swiss franc, for example, the yen, those other havens, are they not where your focus is at this moment?
Yeah, we are looking for them to come off. I guess dollar Swiss, we are looking for an upward trajectory. And the one thing we would say, the one kind of caveat is obviously Brexit. So Swiss franc is, I guess, Europe's answer to a safe haven. So any kind of risk of a no-deal Brexit could see the Swiss franc strengthen. Also in terms of if the US Treasury did decide to designate Switzerland as a currency manipulator, that would something that would see a lot of speculative interest in terms of going long Swiss. So I would be cautious just on those two risks. But otherwise, we are looking for safe havens to come off.
Emma, thanks so much. Stay with us. Emma Daly, Macquarie FX strategist. We'll get further thoughts from Emma specifically around what's going on in the UK and other European matters. The UK economy expanded the most on record in the third quarter. We've just got some comments coming through from the Bank of England Governor Andrew Bailey talking about the level of scarring on the UK economy, hopes for around the vaccine. We'll get into some of that next. This is Bloomberg. Welcome back to the European Market Open. Just coming up to 10 minutes into Thursday's trading session, and we are moving to the downside. As you can see, the European equity market down 0.8%. A couple of sectors that are in focus to the downside: banks and autos. So some of those value names moving lower today in a way they did not do earlier on this week when we got that vaccine news flow. Let's get to a Bloomberg Business Flash for you. Here's Laura Wright.
Thanks, Anna. Sony's PlayStation 5 goes on sale today, anchored by a new Spider-Man game. It's a key test for the Japanese company amid the pandemic's gaming boom. It goes head-to-head with Microsoft's new Xbox. Both consoles have sold solid pre-order sales. The previous console, the PS4, sold 113 million units. Siemens sees rising profit in 2021 as the pandemic wanes and the economy returns to growth. But Europe's biggest engineering firm is warning some pandemic-related challenges will remain. It sees customer investments lagging behind economic growth, and negative currency effects will dampen profit at its core businesses. China is casting doubt on the future of its biggest internet companies, sparking a $290 billion sell-off. Investors are now wondering just how bad it might get for Alibaba, Tencent and other tech giants. Beijing is preparing to roll out a raft of new anti-monopoly regulations, but has said little about how harshly they plan to clamp down. Burberry is betting there are still enough consumers willing to pay more for their trench coats and purses, even during the pandemic. It's planning to reduce its discounts, a move that may hurt sales in the second half of the year. Burberry is looking to improve the quality of its products and woo millennials and younger shoppers. Deutsche Telekom is raising its earnings forecast for the year. It says the tie-up with Sprint boosted revenue and its German business has added new customers. Deutsche Telekom says the integration is ahead of schedule and it now expects to see $1.2 billion of synergies this year. That's your Bloomberg Business Flash. Anna.
Laura, thanks very much. Laura Wright in London. Now, the UK government is intensifying talks with industry as it seeks to avert Brexit disruption at year-end. That's as companies are facing upheaval, even if Britain and the EU sign a trade deal. Let's bring in Bloomberg's Edward Evans, who leads our Brexit coverage. Ed, bring us up to date then with the negotiations. Firstly, there's an informal deadline, I think, hanging over these things. How much does that matter?
Well, the deadlines in Brexit are always a movable feast. I think initially both sides had hoped to come to an agreement by the middle of this month. It looks actually like talks are going to slip into next week, so they'll go on discussions in Brussels. I think then you get into a very compressed timetable because both sides have to ratify and implement any deal they sign by the end of the year. Now, for the European Parliament, that process typically takes about 6 weeks. Britain, it's slightly faster, but you can see where you could, if you go much beyond the middle of this month, the timetable for the European Parliament certainly has to be curtailed. So it's getting really now into the end game and beyond the final whistle, whatever metaphor you want, really.
Yes, choose a sporting metaphor that suits. So we've got, obviously, the Brexit negotiations going on. The government, just like many other governments around the world, coping with COVID-19. In the midst of all of that, one of Boris Johnson's senior aides resigns amid tensions that seem to be gripping Number 10. What does the international investment community need to know or understand about what is happening behind the scenes here, Edward?
Well, I think the key thing to remember is that a lot of the Vote Leave campaign ended up in Downing Street advising Boris Johnson. Kane, is one of those people who are very close to Dominic Cummings, who was, of course, the mastermind behind the Leave campaign. Now, if Kane goes, and this is essentially a proxy battle between the Brexiters, the hard group of Brexiters, and the rest of the party, if there's a sign that those Brexiters are losing out, that will have implications, that could have implications for what kind of Brexit, what kind of country we get after Brexit. I think with the negotiations, it looks like Frost is staying on, but the big question will be how does the country look after Brexit? Cummings had various projects he was very interested in, levelling up, talking about creating a British equivalent of DARPA and scientific research and so on. Is that the kind of country we get after Brexit, or is something much more traditionally conservative? We still don't know, and we'll have to wait and see how it plays out.
Okay, really interesting. Thanks very much for bringing us the stories. Ed Evans there with the latest on the UK. And sticking with the UK, we also got data out this morning. The UK economy expanded the most on record in the third quarter. But that rebound has since been derailed, of course, by an increase in virus cases and new restrictions. September saw the slowest growth in the UK since April. Emma Daly, Macquarie FX strategist, is still with us. Emma, what did you make of the latest data out of the UK? We've seen some weakness in the pound. This is cable I'm talking about here, 131.90. Is it GDP data that can be in the driving seat for sterling? What is in the driving seat for sterling at this point?
Unfortunately, it's just Brexit, as it has been for the last 4 years. I think markets are actually pretty optimistic about getting a deal done. If you look at positioning, there's nowhere near the net short position that we had in as we were approaching previous Brexit deadlines. If you look at option markets, they're obviously very relaxed about this event. They think a deal will come through. Saying that, I think if we do get a deal announcement, just on the knee-jerk reaction, we're going to get much higher. Current levels, we're looking at about 140 for cable, and in euro sterling, about trading back down to 85. The other thing that could definitely affect sterling at the moment is whether the Bank of England is still contemplating negative interest rates. We've obviously had news of a vaccine. It is a potential game changer. So what are the implications of that for central banks? At the moment, the Bank of England is in consultation with the regulator looking at implement a negative interest rate policy. But we've seen, sterling OIS markets really rapidly pricing out the prospects of negative rates. They're not priced in for the next year, ever since we had that vaccine announcement. So the issue is today, will Bailey endorse that? Will he say, negative interest rates are now less likely?
Do you think it's a binary matter whether we get a deal or not? Do you think sterling is priced around a binary outcome, Emma, deal or no deal? Or does the nature of this so-called skinny deal matter to FX traders, do you think?
In one way, I think probably the nature doesn't. I think the market is just looking for that headline that we have a deal. I think the absolute worst case is defaulting to WTO trading terms. So I don't think the market is going to pick through, what do we actually get in terms of fields? Is the UK signed up to regulations for the foreseeable future? I don't think the market is actually that nuanced, certainly in terms of the FX market, in terms of what kind of deal we get. It just matters that we get a deal.
And you have some conviction around euro sterling. So away from taking the dollar out of this, how do you play euro sterling through to the end of the year then?
Yeah, so I'm kind of looking, opportunistically for some upside in euro sterling, just on kind of some kind of Brexit negotiations breaking down. And then I think, position long, and let's see if we get a move to 85. I think kind of stripping out that dollar, the market is still trying to digest so many kind of dollar factors in terms of the global outlook is probably a good play at the moment.
You were talking about the Bank of England and the possibility of negative interest rates. We've been watching some headlines come through from the Bank of England's Andrew Bailey saying GDP figures are in line with what the bank thought. The economy gap with the end of last year is still huge. Of course, we got this, I mentioned the GDP data earlier on. He's also saying he doesn't see a great need for yield curve control. Is that something that the market had been thinking about? If they were starting to price out negative interest rates, were they thinking that maybe yield curve control, that tool, might be employed?
So I don't think in the UK market, and we had seen actually the Bank of England reduce how much they were purchasing. Certainly not the most aggressive central bank in terms of their reaction to coronavirus and lockdown. I think it was very much the case of negative interest rates and whether we have an increase asset purchase target. We obviously did see that increase come through. It's just a question of if negative interest rates are on the ticket, and also don't relate that we could have a micro rate cut if we got something like a 10 basis point cut that brought us back down to zero. That is also an option. But I think the market is very dramatically priced that out after Monday's announcement of a potential vaccine.
Yeah, and interesting, Andrew Bailey saying there's no precise date in mind when negative rates would be usable. That is if indeed they ended up in that direction. In terms of dates you're watching then on the UK calendar, Emma, when we think about Brexit, there was an informal deadline due this weekend. It looks as if our reporting suggests at least that might be cast aside. Do any dates matter other than the end of the year? I mean, what are you going to be looking for? These things need approval, don't they, in various parliaments?
Yeah, absolutely. So originally we had thought the penultimate EU parliamentary session to allow them time to review it and to vote on it. And also, if the EU decided that actually we're going to do the longer ratification process, which sees national parliaments vote on it, it would allow more time for that. We are getting very close to, a deadline for actually logistically, let's get this ratified. So for us, I guess the ultimate EU Parliament session this year, which is the 17th of December, is a key date to watch. And we really need to get your joint legal text by mid-December to get it ratified by the EU Parliament and obviously a unanimous approval by the EU Council.
Emma, thanks so much for your time. Really appreciate it. Emma Daly, Macquarie FX strategist. And Emma will be continuing her conversation with Bloomberg, but on Bloomberg Radio at 9 a.m. UK time this morning. So in around 40 minutes' time. Coming up on this programme, the clock ticks on TikTok. The deadline for the video app to divest is today, but parent company ByteDance says it hasn't heard back from the Trump administration. They must have other things on their mind. We discuss next. This is Bloomberg. Welcome back to the European Market Open. 23 minutes into a trading session that looks to be pretty negative. US futures have been pointing to the downside, and that continues to be the case. NASDAQ futures down by 0.4% this hour. Now, the deadline, talking of tech, the deadline has arrived for ByteDance to sell TikTok's US operations or face a ban from the American government. The video sharing app is asking for an extension, but says its requests have gone unanswered. Joining us now to discuss is Danny Berger. No doubt this is increasingly complicated by the election. But Danny, what is going to happen to TikTok when it hits the deadline today?
Well, Anna, ByteDance itself doesn't even know. For one thing, they most certainly won't face a ban today. Some of the creators on the app had taken the case to a Pennsylvania federal court who put an injunction on the Trump administration's ability to ban TikTok. But beyond that, TikTok has asked for a 30-day extension to get the deal done proposed between Walmart and Oracle, a joint venture for its U.S. operations. They say they've had no clarity on what's going to happen there. So yesterday, TikTok did file a petition challenging the White House's order, saying it violated the company's constitutional rights, Anna.
Yeah, and how does the election play into this then? Does it change TikTok's or other Chinese tech firms' calculations, their strategy, if they assess that the Trump administration is only going to be in power for a couple more months? You know, is that weighing into this?
Well, they certainly still need to tread carefully at the moment, because in 2 months, Trump certainly could do more damage. Mike Pompeo, for example, speaking yesterday in a public speech, said we're not done yet. Those pillars of strength and candor are also the foundation for America's policy towards the world's #1 threat to freedom today, the Chinese Communist Party. Remember, Trump, he can issue executive orders for things like tariffs. That's what he did with ByteDance. So he can move quickly. However, going forward, Lorraine Tan from Morningstar does say she thinks Biden could cancel these executive orders once he's in office, but other ones that have bipartisan support, like tariffs on steel and aluminum, will be much harder for him to take away, Anna.
Thanks very much, Danny. Danny Berger with a look at the TikTok saga, the TikTok story, and how it continues to move along. Let's get to your movers then this morning. We started the program about an hour and a half ago with some numbers out of Burberry, of course, the often called the trench coat maker, but of course they make many other things. Luxury goods company, luxury apparel maker. First half sales declining less than expected, and I can tell you that the share price of Burberry is currently up by just over 4%. Revenue returned to growth in October, reducing sales to third-party retailers to cut inventory in the market. That is part of the story there. In terms of other stocks that we're watching this hour, we had a conversation with Siemens on the Daybreak program. Of course, that stock is down by just over 4%, and that is a heavyweight business. That stock is just over 4% to the downside on the back of the earnings story there. A slightly negative picture also coming through from Pirelli on the back of their numbers. So look out for some of these earnings-related stories moving markets. And talking of earnings-related stories, we're going to have a conversation with the German industrial services provider Bilfinger. The earnings part of the conversation there, M&A, and whether the business will be taken out by private equity, also very much at the heart of things. So that conversation next with the company's CEO. This is Bloomberg. Welcome back to the European Market Open. 30 minutes into a trading session that looks broadly negative. Looking at where we are on these equity markets, we've retreated down by around 0.7% on the Stocks Europe 600. I want to get to a live event that's taking place now. I want to get to the live event that's taking place with regards to Wirecard, because one of my colleagues is speaking to the boss of BaFin, essentially the German regulator, and talking about Wirecard. The BaFin president has been saying that the Wirecard has tarnished Germany's reputation. It has certainly tarnished Germany's reputation, that's for sure. We have lost trust. Perhaps we can listen in just a little bit to this conversation.
Will this institution your institution be able to handle this? Do you have enough manpower to actually be an expertise to actually handle this?
Well, it goes without saying that if the role of BaFin is strongly enhanced and strongly widened by depth and scope, we would have to enhance the manpower and the expertise, the level of expertise to do that. That's a given. But even then, the way we would act in situations like that, of course, would always be in a mixture of homegrown, in-house expertise, own people on the payroll of BaFin. At the same time, we will always, or in many cases, revert back to outside auditors to instruct forensic scrutiny and forensic auditing of a particular case. So it would always be a mixture of both. But again, if our role, rightly so, is going to be strengthened, then the manpower to do it has to be strengthened as well. That's a given.
Okay. We're currently seeing that China is cracking down on fintech companies like Ant Financial. If you look at that, and if you also look at Wirecard and what happened there, is one of the lessons that Europe as a whole, including Germany, should regulate its fintech firms much harder in the future as well? Well,
that's a strong connection you're drawing there. I think the way, the motive and the way why...
That was the BaFin president, or that is the BaFin president, Felix Hufeld, speaking with Bloomberg's Daniel Schaefer as part of the Future of Finance event. I should have mentioned that that is what we are watching before we went to those live pictures. But you can see more of that using the Live Go function on the Bloomberg if you have a Bloomberg terminal. We'll keep across any headlines coming from that. Really interesting to see, of course, Felix Hufeld's comments around Wirecard. Let's stay in Germany, but a very different story. We had earnings this morning from Germany's Bilfinger. The industrial services provider has confirmed its 2020 guidance while reporting a 20% drop in adjusted EBITDA, earnings before interest, tax, depreciation, for the third quarter. Last week, we reported the company is said to be exploring a sale after receiving takeover interest from buyout firms. I'm pleased to say that Tom Blades joins us now, the CEO of Bilfinger. Tom, good to speak to you. We'll come to some more strategic matters in a moment, but in terms of the performance of the business that you're reporting today, how much visibility do you have around that as we head into the winter?
Well, I think if you look at our results, we're more or less in line with what we said just after we got into the COVID pandemic. We did a lot of work on scenario modeling at that time in early April. And then we actually came out with a year-end adjusted forecast. And I'm very pleased to see that we're actually on track to delivering on that. So we see sequential top-line performance. It's increasing, so the markets are slowly returning. We see that we've done a great job in taking out excess capacity. I think that's reflected in the gross margins, which are on the same level as they were last year. We've been able to reduce SG&A to an all-time low. Our team is doing a great job on working capital reduction, so cash flow is up, the balance sheet is strong, and I think we're very much on track to what we said we would achieve, and we're very well positioned for the time ahead.
So well positioned for the time ahead, you say, Tom, but are you open to a full takeover of the business? This seems to be something of a talking point right now.
Yes, I see that in the press. I think it doesn't take a rocket scientist to figure out that when our share price dropped to 15 euros or thereabouts, just after the COVID pandemic hit, We still stuck to our guns on our 2024 aspirations. So we said we would get to the 5 billion, we would get to the 5% EBIT, not EBITDA, but EBIT. And then, of course, when you then look at the share price at the time, there is a gap. And this value gap is being the subject of conversation with some of the PEs. We've had conversations, it's been quite a while ago, that was more towards the middle of the year. They've been loose conversations. Nothing has materialized out of that. So I think Bilfinger finds itself in the same position as many companies. Share price much lower than it was. Long-term, mid-term plans very much intact. And that, of course, does attract interest.
So do you see ongoing interest from private equity, Tom, or is it just a feature of the summer that has now drifted away?
No, I think it's a recurring theme. People come and go. They look at what is out there on the market. I wouldn't be surprised if something came, but right now there isn't an ongoing story.
Do you think that Bilfinger could benefit from continuing its turnaround away from the public spotlight a little bit, away from public markets? So would some time in private equity hands help on that front?
We don't look at that. We're very happy to have an anchor shareholder that's been very supportive to Bilfinger over the years. We are still in the middle of our restructuring. The COVID pandemic has given us a setback, so it's kind of one step forward, two steps. One step backward, two steps forward. We're going to be back on track, and we on the management side, we drive shareholder value. We do what we have to do, and we try not to listen to market rumors.
Okay, but you do listen to your biggest shareholders. I think, is it Cevian, your largest shareholder? What is the view amongst these large shareholders about private equity interest?
We actually don't, have a dialogue directly with Cevian on that. Our dialogue is with the supervisory board. And, we had a meeting yesterday of the supervisory board. That's normal ahead of a quarterly release. And they commended us on our results. They commended us on our progress. And they tell us to keep on building shareholder value. It's that easy. Yeah, there is. I wish I could give you more, but it's that simple.
Okay. You do, as a business, have quite a lot of exposure to oil and gas, as many other companies do. We spend a lot of time talking to investors who are increasingly conscious of their carbon footprint. Do you think that the oil and gas exposure is something that puts off some investors, might even put off some private equity bidders at this point?
Our oil and gas exposure is across the spectrum, upstream, midstream, and downstream. Certainly the upstream part has suffered. On the other hand, it's something that is returning. Oil prices are firming, and I think, despite the energy transition, oil and gas have a role to play for some time yet. So I think for industry insiders, they understand the play, they understand the cyclicity of the business, and I think, like I said, they have a different perspective on us than someone that may like to invest in, Google, Amazon, Apple, whatever. I think that, if you look at the peer group as well, you see a similar performance. So we're comfortable with our position, which is a little bit under 30%. And we think going forward, we have enough of additional opportunity in the portfolio to offset any kind of shortfall on the oil and gas side in order to reach our 2024 aspirations.
Talking of the energy mix, Tom, you work in nuclear as well. When do you expect revenues from the Hinkley Point contract to start coming in? Tell us a bit about that.
Revenue is coming in. So, we are a tier 1 supplier to the project Hinkley Point for EDF. We announced already a commitment on the side of EDF for over 550 million euros during the course of the project. That revenue or that order commitment is being called off as we go through the project. Roughly today, we're at about 90 million of that 550. So the rest will come as we go forward. It's also not currently reflected in our order backlog. As I said, it's a call-off contract. As the call-offs materialize, we record that to order backlog, which is also why we have a fairly confident outlook on 2021 and beyond.
Tom, thanks so much for spending time with us today. Good to speak to you. Tom Blades, the Bilfinger CEO. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. The UK is posting record growth for the third quarter, but the rebound still leaves it far behind other major economies. The recovery is also being derailed by rising virus cases and a new lockdown. September saw the slowest growth since April. President-elect Joe Biden is naming longtime aide Ron Klain as his chief of staff. Klain played a leading role during the economic and public health crises of the Obama administration, leading the White House responses to the 2014 Ebola outbreak. Klain has been chief of staff to two vice presidents, Biden and Al Gore. OPEC and its allies are considering delaying next year's planned hike in oil output by 3 to 6 months. Sources tell Bloomberg there was even discussion of cutting production even further, but the idea did not gain widespread support. Ministers are holding an online meeting from November 30th. Turkey's President Erdogan is signaling a ceasefire with international investors. He's pledging to contain inflation and support market-friendly policies. It is a U-turn from his unorthodox view that lower interest rates promote slower inflation. Still, there are doubts about Erdogan's change of heart and how long it will last. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much, Laura. Laura Wright here in London. Coming up on the programme, a defeated Donald Trump has yet to concede, and he has the backing of many in his party. Up next, we discuss the US transition of power with our US politics editor, Kathleen Hunter. This is Bloomberg. Welcome back to the European market open this Thursday morning. 44 minutes into the trading session. Things look negative, but actually off session lows. Nasdaq futures actually pulling up a little bit, and we're down by around 0.3% on our Nasdaq futures at this point. Going stateside for some politics then, President-elect Joe Biden named longtime aide Ron Klain as his White House chief of staff. He played a leading role during the economic and public health crisis of the Obama administration. Joining us now is Kathleen Hunter, our US politics editor. What do we know about these early appointments then from the Biden team? Kathleen Hunter, is Anna Edwards here in London. Not sure if you can hear me. I think we may have lost Kathleen, which is unfortunate. We will try to get her back. We want to understand a little bit more about what these appointments mean and indeed where President Trump goes next. Let's pause that conversation for a moment. The EU's budget commissioner has told us he's quite confident on the prospects for economic recovery. That's after negotiations moved closer to finalising a landmark €1.8 trillion budget and stimulus deal. Johannes Hahn spoke exclusively to Bloomberg's Maria Tadeo.
Well, it's a strong and bold answer to the COVID crisis, but at the same time, it's a budget for 7 years. This is something which doesn't exist anybody else and anywhere else. This is why it was so important to get it. Also to get it to give a clear answer to the economy, to the capital markets, etc. And of course, we have agreed also in the Parliament and with the European Council, the member states, to pursue our main political goals, and this is to address the climate change, but also the digitalization.
And, you know, now that you mentioned capital markets, there was almost this real anxiety with investors and financial markets to see whether or not that recovery fund, which is so big and so needed for so many countries in Europe, whether or not that would be ready and operational by the start of 2021. Given the fact that we have a deal around the budget, can you say at this point, yes, it will be ready by the start of 2021?
We can start borrowing only if all member states ratify in their national parliaments this agreement, and this, like always, takes a little bit time. So, as I said several times, and I haven't changed my opinion on this, we will certainly start in the second quarter of next year, the borrowing exercise. But till then, we are still working on our sure issuances, where we had yesterday, again, a very successful issuance.
Yes, and I want to talk about that because you also had another 14 billion euros that tapped into the market. We know the first one was 14 times oversubscribed. It was very, very successful. Are we going to see more auctions from now until the end of the year, given that market sentiment does seem to like Euro assets?
Well, there will be another one. Yesterday it was a good day. We had actually two tranches, one with 8 billion for a 5 years maturity, and another one 6 billion for 30 years maturity, and altogether the orders were in a magnitude of 175 billions. So it was not anything. It was again a huge success, and we will have a third auction still in November this year.
And you're going to do it the same way it's been done so far? It's the same kind of amounts, it's the same type of syndications, it's almost the same structure?
It will remain the same structure, serving our member states, those who are asking for it, almost 20 of them. And so this will continue in the at least first quarter of next year.
And of course, all of this does provide real momentum for European assets. But there is this question, which I believe you alluded to at the start of the interview. Member states, will they ratify this? Do you expect any opposition? I know there has been this idea thrown around that perhaps some countries, particularly Eastern Europe, could be inclined to veto the whole package. Is that a real risk?
Look, there are always some who raise their concerns and critics, but at the end, I think indeed, as you said, there's a momentum. If you see all the reaction here in-house, but also across Europe, there's a kind of relief after this decision yesterday, and that's why I think nobody can really step aside from this dynamics.
And, you know, I know it's very difficult to predict what's going to happen over the next 6 months because we're still very much in the coronavirus. I mean, this hasn't gone away. Yeah. But we know right now there's a prospect of the vaccine. There's this deal for the European budget. Do you feel that perhaps we can avoid the double-dip recession that the markets fear and actually see a bigger rebound in the economy?
Well, it will also depend how fast these vaccines, I mean, we have received very promising news about the availability of a vaccine. And if this comes into market even in the first half of next year, I'm very confident that this will help economy to recover faster and indeed to have maybe by the end of the year better figures than forecasted today. So all in all, I'm for the moment quite confident.
That was the EU Budget Commissioner Johannes Hahn speaking exclusively to Bloomberg. It's still to come on the programme. How do vaccines affect the dollar's trajectory? We'll put that question to the Market Live team. Ven Ram joins us next. This is Bloomberg. Welcome back to the European market open. 52 minutes into a trading session that looks negative for European equity markets. US futures also pointing to the downside. A bit of a change in theme, change in narrative from the start of this week when we were so risk on because of that vaccine news. Ven Ram has joined us now from our Markets Live team. Good to speak to you, Ven. I just want to talk about risk appetite and where treasuries go here, because I was looking at, treasury yields ramped up in the run-up to the US election. A lot of expectations about a blue wave. We didn't get that, or at least we haven't quite seen it develop as planned. We'll wait for January around the Senate. Then we saw retreat on those yields, and now yields back up at spot 92 at 92 basis points because of virus hopes. So how are you trading treasuries? What are you looking for at this point?
Morning, Anna. I think that the news of the progress on the vaccine has had a dominant effect on the rates market, especially if you look at the long end, and may indeed mark a watershed. Of course, we still have lockdowns in many parts of Europe and the US, but people have somehow learned to live with it, and the economies have shown a degree of resilience, as we have seen. So it's not a new threat to the economy. In other words, there's really no argument for 10-year rates going back to, say, 65 basis points, the familiar perch it was in for much of 2020, unless the economy goes into a tailspin from here. The Fed's actions have also quelled volatility in the markets. And with the election uncertainty in the rearview mirror now, the bias for the natural bias for rates is definitely for a bear steepening into 2021. Anna?
Okay, so little reason for those rates to come, for those yields to come back down again. I guess we'll keep an eye on what happens with the virus fight and the lockdown measures in the United States. What does all of this mean for the dollar? Because again, the dollar was also being driven around by the election expectations last week and before. What does the dollar move on now? Because of course we have the vaccine in there as well. There do seem to be a number of factors pushing and pulling.
Absolutely, there are several factors that are in play driving the dollar around. I see at least four factors: real rates, nominal rates, the macroeconomic backdrop, and what is known as the uncovered interest rate parity, which has been in play for much of 2020, Anna. The theory basically states that investors can't look to make extra money by seeking higher rates not available in their domestic market, because what they will lose on interest rates will be offset by currency depreciation. But with most central banks near the lower end of rates, or at any rate approaching the lower end of rates, it's hard to make a case for this parity effect to hold into 2021 and give traction to some of the lower rate currencies that we have seen happen. We've also seen both real and nominal rates in the US rebound of late, as we just discussed, which are also bound to be dollar supportive. So in other words, I see the dollar making a comeback in the first half of 2021. Anna?
Okay. Ven, thanks very much. Thanks for your time. Ven Ram from our Markets Live team. Thank you very much for joining us. We've, as promised, kept across that conference that is taking place, Bloomberg Future of Finance conference, where the head of BaFin, the German regulator, is speaking, Felix Hufeld. He's gone on to talk, he was talking about Wirecard. We brought you those lines earlier on. He's gone on to talk about the banking sector, and I want to bring you some of the lines he's giving us there. He's saying they're very carefully watching the bank's approach to provisions, sees a wave of credit losses hitting the bank's balance sheets, and some banks are set to fail after the pandemic. According to Hufeld, he says that deals are one way for banks to deal with COVID, and supervisors are not against big banking deals, which might be of interest to some in the corridors of power in big European banks. That is it for the European market open. Stay with Bloomberg TV. Surveillance is up next. European equity markets on the back foot this morning, but that's after the big rally earlier on this week. This is Bloomberg.
Another grim milestone, global virus deaths jumped by the most on record. Cases worldwide top 52 million, markets head lower. Recovery derailed. The UK economy sees record growth, but the rebound leaves it far behind its peers as a new lockdown looks set to bite. And President-elect Biden starts to name his cabinet. Ron Klain will be his chief of staff, one of the most powerful roles in Washington. Biden says bringing the pandemic under control is his top priority. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, let's check on the markets. We're also getting some IEA report, and that could filter through some of the things that we're seeing on the market. Now, overall, a lot of the focus, of course, is on the number of infected because of COVID-19. The global stock rally that we saw ebbed a touch. If you look at bonds, there's a lot going on. Treasuries, for example, rising as investors assessing signals of overheated equity markets amid this deteriorating coronavirus situation in many of the large countries. The IEA also saying it's cutting its oil demand outlook, saying that the vaccine won't actually rescue the market. And you can see crude oil over New York, 41.37. And then I don't look at a specific stock very often, but actually Burberry coming out with figures that weren't great, but that they were better than expected. And you can see Burberry gaining 3.5%. Now let's get straight to the Bloomberg. First Word News here in London with me is Laura Wright. Hi, Laura.
Good morning, Francine. The UK is posting record growth for the third quarter, but the rebound still leaves it far behind other major economies. The recovery is also being derailed by rising virus cases and a new lockdown. September saw the slowest growth since April. President-elect Joe Biden is naming longtime aide Ron Klain as his chief of staff. Klain played a leading role during the economic and public health crises of the Obama administration, leading the White House response to the 2014 Ebola outbreak. Klain has been chief of staff to two vice presidents, Biden and Al Gore. China is stamping out dissent in Hong Kong, disqualifying lawmakers it deems are not loyal enough. Other opposition politicians are resigning in solidarity. It's a message to President-elect Joe Biden that no amount of pressure will prompt China to tolerate defiance from the former British colony. The move has been met with condemnation. Turkey's President Erdogan is signaling a ceasefire with international investors. He's pledging to contain inflation and support market-friendly policies. It is a U-turn from his unorthodox view that lower interest rates promote slower inflation. Still, there are doubts about Erdogan's change of heart and how long it will last. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Now, it's been a huge week for news and the markets. Joe Biden became president-elect on Saturday. On Monday, we also got news of Pfizer's positive data and the vaccine trial. And now a global stock rally, of course, showing signs of stalling. That's as investors assessing a deteriorating coronavirus situation in many large economies around the world and indicators of overheating equity markets. Well, joining us to discuss the markets and the path forward is Martin Look. He's Chief Investment Strategist for Germany, Austria, and Eastern Europe at BlackRock. Martin, thank you for joining us. When you look at some of the things that the market is looking at and the rotation that we see within asset classes, what trend will we see from here until year end?
Yeah, thanks, Francine. Thanks for having me. I think that markets are now trying to really price in this new reality that we're looking at, with the vaccine not so far away and really, for the first time, an ability to really look through this pandemic. And the big question mark will be, is now the second wave and maybe a third wave that could still follow stronger, or is the policy response stronger? We have seen a policy revolution on the part of both fiscal and monetary policy paving the way for many companies into the post-COVID world. And markets are now trying to get their head around this. My sense is that after a first wave of a lot of optimism, especially in risk markets, there is now a point of hesitation. And markets have, looked around this and priced this in very quickly. And now we need to take the next step into this new reality. We are probably some 6 to 9 months away from normalization in societies and in the economies. So it is probably too early to tell, and there is a lot of uncertainty around the profit outlook for markets. So this is why volatility will still stay high for the weeks to come, and then we will go into 2021 with more optimism, but still some uncertainty.
Martin, this is a question that we're asking on our live blog today. How do vaccines affect the dollar trajectory? Are you concerned that we'll be disappointed by how fast we can get the vaccine, or is it actually, do we need to, I guess, relook at the scenarios based on that?
Well, this is a very good question. I think the answer to this question will lie in the fiscal response in the United States to some extent, and then of course to the further trajectory of the global recovery that we are seeing. And we must not become too optimistic. We had a lot of optimism regarding a V-shaped recovery around the data coming out of many industrialized countries around the summer. Now that we are seeing also going through the lead indicators that the economic recovery will probably somewhat shallower. And I think a lot of the trajectory of exchange rates in the first place boils down to a relative game, a comparison between the fiscal reaction in different parts of the world, mainly in Europe and the United States. And as we're seeing so far, there is now, a lot of expectation regarding CARES 2 in the United States, regarding further easing, fiscal easing and monetary easing in Europe. So I think this will be more relevant for the trajectory of the exchange rate than the outlook for the vaccine. Generally speaking, I'm a bit more cautious. I think that even with a vaccine, it will take longer for economies to recover and for societies to normalize than markets are pricing in at this point in time.
Martin, yesterday there was definitely certainly quite a big correction when it came to technology stocks. This has to do with Beijing also cracking down on some of their big companies. Are we underestimating the change that actually technology stocks could get into, either through regulation in China, regulation in Europe, or even the US?
Well, there's, I think, one thing that we need to look at, and that is China is really emerging, or it's likely to emerge from this pandemic as probably something like a hybrid. China is no longer an emerging economy. It's really become a hybrid, and it's also using this pandemic to kind of grow its influence. You can see that in different parts. You can see it in the South China Sea when it comes to really threats to Taiwan, but you can also see it with Hong Kong, as you were just mentioning. That's one point. So we also see a kind of division in the technology space, one technology space building around China, the other one building around technology companies, mainly in the US and also in small part in Europe. And the second thing is regulation. The question as to whether the new administration, the incoming administration in the US, can threaten the success of tech companies. We think there is a slightly higher chance now with the Biden administration coming into power that some more regulation will take place in the technology space. We think that technology companies, at least in the short term, will be leading equity markets. So they're still in the most promising part of profit developments going forward, but there might be a kind of a rotation within the technology sector, going away from internet-based business models towards more business models built on connectivity, built on growing the kind of hardware space in the technology sector. So still good outlook for technology companies, but with different threats from different sides of the world.
Martin, when you look at how much hope there is that a Biden administration goes back to something that looks a bit like multilateralism, that relationship with China and the US will get better, are we expecting too much from a president that may also not have the Senate in hand?
Well, if you look at the behavior of the Democratic Party when it came to regulation regarding trade with China and also China generally speaking, then there has been quite a lot of bipartisan support for stricter measures on China. So my sense is that there will be a change in the way that the US deals with China, in terms of style and in terms of a more, let's say, civilized approach. But in substance, there will not be much of a change. There is a growing rivalry between the US and China going forward in the technology space, as I was saying before, but also in the strategic space, in the military space. And so I'm not too optimistic with regard to a lot of improvement on the trade front when it comes to the relationship between the US and China. There will be some improvement, though, on the front between the US and Europe. So the US could, in the future, under a Biden administration, side with Europe to confront China. So it will be more of a kind of bilateral world rather than a world that is built on multinational relationships.
Martin, I feel like we spent most of the summer saying how Europe was on a great path, how actually it could underperform a lot of other regions in terms of economic growth, and therefore there would be opportunities for investors. Given we still don't have a resolution on Brexit, and that's very uncertain, given the resurgence of infections in Europe, have you changed your view on Europe and UK?
Yes, we have indeed. So we have become a bit more cautious, and we're now neutral on Europe in the equity space. And you're absolutely right. And Brexit is just one example of the many inconsistencies that we still have here in Europe. There is also a lot of inconsistencies if you talk about the financing of the European Union, if you talk about the connection of financing to human rights issues and issues in Eastern Europe. And many other things, migration, just to name a few. So I think there are too many inconsistencies in Europe right now to be really optimistic about the outlook of Europe outperforming other regions in the world at this point. So I think being neutral at this point in time, even if we're looking into a cyclical recovery at some point in 2021, we should not be over-optimistic regarding the performance of European companies at this point.
Martin, we're just getting some breaking news out of Japan, and this is according to NHK saying that Japan finds a record 1,634 new cases of coronavirus. I imagine that they now have these new cases. Is there any part of the world, and I know, a strategist is not a virologist, but is there any part of the world that is being spared the second wave? And is it too tricky to say that actually that's where I want my money to be in?
Very, very rare. And if you look at, you were just mentioning these numbers. I think we have many countries now, right, in this period where numbers are really getting worse. If you look at Latin America, for example, 8 out of 15 companies with the highest death rate per population are in Latin America. So this goes very often goes under the radar screen. We have very high numbers of rising infections in many of the larger emerging economies. So if you just want to look into one country that is doing really well, or that is China. And if you look at one region, that is a number of countries around China, some of the Asian countries that are really doing better than many parts of the world. You were mentioning Europe. You were mentioning other countries here as well. So I think if you really want to draw one conclusion from this pandemic at this point in time and the market reaction so far, that is that you want to increase the share of your portfolio in Asia, specifically in China. And again, I do not think that after this pandemic, China will continue to be treated as an emerging economy. It probably will rather be treated as a kind of hybrid, probably even growing its share in global indices. So there will be a force for many index tracking investors really to be invested in China anyway.
Thank you so much. Joining us today, Martin Luke, their Chief Investment Strategist for Germany, Austria and Eastern Europe at BlackRock. Now, up next, we speak to the UK Shadow Chancellor, Annelies Dodds. We'll talk GDP, the pandemic, tensions at number 10, and of course, we'll talk Brexit. This is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the UK economy expanded the most on record in the third quarter, but that rebound has since been derailed by an increase in virus cases and new restrictions. September saw the slowest growth in the UK since April, and it still leaves Britain's recovery trailing behind its major peers. Well, I'm very pleased to be joined by UK Shadow Chancellor Annelies Dodds. Thank you so much, Annelies Dodds, for joining us right here on Bloomberg Surveillance. We're in a lockdown in the UK. We just had some figures. How's it going? I mean, this is such a difficult and complicated way, of handling this pandemic. And I know you've criticized the government in the past, but is there anything that they're doing well?
Well, I would certainly say that we have public servants right across our country, and indeed many working in the private sector, who've been striving so hard to get us through this crisis. I have to be honest and say I don't feel that always central government, unfortunately, in the UK has backed them to really achieve what they could do. And we've had a long-running problem, in particular in the UK, with test, trace and isolate, where actually those services delivered by public health services have been very, very effective, reaching very large numbers of people. But unfortunately, central government hasn't changed its approach until really quite recently. So, I'd certainly say there are positive things happening in the UK, but I do think our central government needs to take a different approach.
What worries you in terms of the approach that's being taken now? Are we, just biding time, waiting for the vaccine that we heard about this week? Or do you worry about small businesses? Do you worry about furlough programs?
Well, I suppose my biggest worry is that we've seen quite a last-minute approach to decision-making from the UK government, whether we're talking about public health challenges or indeed about economic ones. So we called on the Chancellor to provide a medium-term perspective on wage support, for example. We called on him repeatedly. It was only announced then after the lockdown had come into place in the UK and after really quite large numbers of jobs had been lost. So we need to have that longer-term perspective. I think it's really important that we don't just bide our time and wait until the vaccine comes into play. We've got to sort out test, trace and isolate, but we've also got to make sure that that vaccine can be delivered effectively, deal with the problems that applied in the UK previously around delivery of test, trace and isolate, and learn from them in advance of that vaccine being put into place, and also have that medium-term plan for economic support so that businesses really do have more of an idea around what the situation is going to be into the future.
How can you give them the certainty of what the idea looks like? Is what would be useful for businesses right now, given the uncertainty that, frankly, we just don't know what the number of cases are going to do in the next 2 to 3 months?
Well, you're right. We don't have certainty around the exact trajectory of this disease, although, of course, that can be impacted by many public health measures that we've seen put into place by different countries. But we can have certainty from government around what will happen, what support will be there when different sets of restrictions are put into place. We've had really quite a chaotic approach, unfortunately, in the UK around this. We had what was described as a tiered system before we went into lockdown. Now, those tiers and their introduction weren't, it appeared, determined by clear sets of criteria. There was a lot of confusion around what business support would then be provided for areas that went into so-called Tier 3, which was a system where there were quite high levels of restriction. That led to huge amounts of uncertainty for businesses. It's bad enough, I think, as a business owner, not knowing whether from one day to the next you're going to have your business closed. But it's even worse when you don't know what kind of support will then be available for your business if you have to close, what support would be available to your employees. In the UK, we had a situation where the weekend before the lockdown was actually imposed, I had one employer contacting me saying he didn't know if his staff would be receiving 67% of their wage the next week, 77%, 80%, or if he would have to make his staff redundant. We can't continue like that.
Annelies Dodds, would you be in support of actually increasing the capital gains tax?
Well, that has been suggested in some circumstances by the Office of Tax Simplification, which is a technical body that operates in the UK. I have to say that personally, I don't think it's sensible to be talking about tax changes in the immediate period. I think really we have to be focused in the UK, and particularly in the light of today's figures and what we saw earlier in the week, we've got to be focused on preserving economic activity. You know, we can have a discussion about how we tax that economic activity in the future, but if actually our economy is shrinking, if people are losing their jobs, businesses are going to the wall, businesses aren't investing and people aren't spending, then, you know, it's a rather theoretical discussion, to be honest with you. Yes, in the long term, let's look at these issues, but I think right now we've got to focus on preserving that economic activity.
Annelise Dodds, thank you so much for joining us. She's, of course, a UK Shadow Chancellor. Now, coming up on Bloomberg Surveillance, we also speak exclusively to the Goldman Sachs International Chief Executive, Richard Naudet. That conversation live from the bank's inaugural Carbonomics Conference just after 9:30 a.m. London time. We'll talk about risk, we'll talk about working from home, and, of course, we'll talk about climate change. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. The markets. Well, let's focus on the markets because we had some IA figures. This is something that we've actually seen zigzag quite a lot. Now, oil giving us a good indication of what they're expecting to happen or not to happen because of the vaccine. And then the focus is, of course, on bonds. The dollar is also advancing. Treasury is rising as investors assessing signal of an overheated equity market. Coming up, Italian digital bank Illimity confirms its guidance for 2020. We speak with Corrado Passera next. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Thanks, Francine. Global virus deaths are at record levels, with the UK becoming the first country in Europe to top 50,000 fatalities. There have now been more than 52 million coronavirus cases worldwide. New York is ordering bars, restaurants and gyms to close at 10 p.m. and is limiting indoor gatherings to 10 people. Moderna's vaccine trial has hit a key goal, allowing preliminary analysis of its shot to begin. It says it can get data to an independent monitoring committee within days. It will decide whether the vaccine is effective, if it doesn't work, or if the trial should continue. Moderna's therapy is similar to Pfizer's, so experts expect it to be effective. OPEC and its allies are considering delaying next year's planned hike in oil output by 3 to 6 months. Sources tell Bloomberg there was even discussion of cutting production even further, but the idea did not gain widespread support. Ministers are holding an online meeting from November 30th. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Thank you so much, Laura. Now let's focus on Italy's banking sector. Illimity has reported net profit for the first 9 months of 2020 of 24 million euros. That's compared to an 18 million euro loss a year earlier. Now, the solid numbers were driven by growth in the third quarter in the digital lenders specialty, its SME division. Well, joining us now is Corrado Passera. He's chief executive of Illimity and former Italian Minister of Economic Development. Mr. Passera, thank you for joining us. When you look at some of the concerns out there, it's high debt for Italy, concerns about possible new non-performing loans, of course, so low growth, low productivity, and this wave of infections. How do you see the path forward for Italy?
It's the path that not only Italy has to follow. Now we have also the money to change all the trends that you were mentioning, because the deepness of the crisis will heavily depend on the way we will foster a new phase of growth. And luckily enough, Europe has made an historical path, and now we have an instrument to finance not only a solidarity project like the recovery plan one, but also a big investment plan that we need throughout Europe. And I expect Europe to be more courageous in using the new instruments. We need a major plan of investments in research, innovation, infrastructure, energy transition, and investments that have to be managed at the European level. Investments that are selected, managed, and financed at the European level. That's the new challenge we have in front of us, but we can cope with the crisis we have in front of us. If we don't do that, the crisis will be very deep.
What does the emergency actually mean for a young challenger bank like Illimity?
In that respect, we can say that Illimity is certainly thriving because our already very large target markets are growing quickly, and they remain underserved. And we have developed such a strong business model, both from an IT system point of view. We have no legacy, and so we have a lot of advantages in managing the situation. So the new wave of UTPs and of distress credit that we expect for next year will have Illimity on the forefront. And but the size of this wave will really depend on what we do. We can reduce this wave by doing the right things in terms of regulations, in terms of investments, in terms of trust building, and that's what we expect from the leaders both at the European level and the national level.
Yeah, but if we go back to Illimity, what are the challenges and where are the opportunities? Do you worry about bad debt? Do you worry about some of the small and medium-sized enterprises that you're trying to help out, that they'll just go out of business and fail?
No. We have focused our business model on SMEs with hidden potential, let's say, with good development plans, and there are very many of them. Not all the industries are affected the same way from the crisis, and that's the first segment. Second, for sure, there are a number of companies, and then this number is growing, companies that had problems, that are having problems, but also have the energy, the skills to recover. And we are good at supporting these kind of companies. And that's also something very useful for the system. Then we have a division that is very good at managing corporate distress credit, and unfortunately for the country, the amount of these assets will grow. But that's, let me say, it's good for a good company like ours that extract value and help these kind of situations.
Banks, of course, are crucial to aid some of the transmission mechanism that the government has put in place. Have regulators done enough for banks to be enabled to make that to fulfill that very important role?
I must say that the guarantee schemes that the government has triggered are very effective. It took some time, but now those mechanisms are well functioning, and they are certainly helping hundreds of thousands of SMEs and also medium-sized companies to go through the crisis. So in that respect, I would say, okay, but it's not enough. Now we have to show the way from now on. We have to show how we will use the 300 billion we have on the table, because we are talking about amounts of money that were never available to any government. So we really have the possibility to redesign our country. We have the possibility to tackle issues that were long forgotten. We have at least 4 reforms in education, justice, bureaucracy, and welfare that was waiting for an opportunity like this one. But for sure, we have to really use the energy of the companies, and there are a number of companies that can be helped in pushing the situation.
Corrado, thank you so much for joining us. Corrado Passera, their Chief Executive of Illimity and former Italian Minister of Economic Development. Now, coming up, we speak with the Goldman Sachs International Chief Executive, Richard Nodde. That exclusive conversation live from the bank's inaugural Carbonomics Conference. That's coming up next, and this is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Joe Biden will take office next year, having made unprecedented commitments to tackle global warming. As well as a 15-year plan to create carbon-neutral electricity, the president-elect has pledged the U.S. will achieve net zero emissions by 2050. So how does the U.S. and the rest of the world meet that challenge? Well, that's the question being discussed at the first-ever Goldman Sachs Carbonomics Conference, which is taking place online this week. Well, joining us for an exclusive conversation on the back of that is Richard Nodde. He's the Chief Executive of Goldman Sachs International. Richard, great to speak to you. So thank you so much for coming on. Let's talk, first of all, about carbonomics, climate change, and ESG. How many more products, as a percentage of overall products, are your existing clients asking for? How much more can this space actually grow?
I think we're just at the beginning in terms of the development here, and as you said, this is our first conference dedicated, solely to this topic. But if I look at the support and the participation, we've got something like 30 different really big company CEOs participating today. Some of them are from the energy space, upstream oil and gas, but also renewables, mobility companies, consumer products companies. So really, right across the economy, and we've got something in the order of 5,000 participants broadly from the investor universe. So huge focus and huge interest in the topic, and Biden's election obviously gives it further impetus.
Richard, we've had some pretty encouraging news in, over the week. It's a vaccine. It's what we've seen with maybe commitment of the U.S. going into climate change. Are we at a point where we're maybe too optimistic that things will move on the vaccine front, that things will move on the climate change front?
Well, let's start with climate change. Europe has obviously shown real leadership in this space, and the Green Deal is just another example of it. The UK is certainly doing its bit. But over the last period of time, we've seen China really commit to net zero. Biden has said what he said, and we'll have to see how this plays out in the US. Obviously, if Biden if the blue wave had actually happened and he'd had full control of all both Congress and the Senate, that would have been an easier path for him. So if he doesn't get the Senate, he'll need to do this on a cross-party basis. But there's obviously a lot that the president can do without Congress, through regulation, through appointments of personnel, and clearly the US is moving in that direction. But I think the important point is that the world is obviously going to be able to move more quickly if it has good policy support and good government support. But I don't think the world's going to wait for that. You see society broadly supporting the move in this direction. You see capital flowing towards ESG friendly products. We would argue that the cost of capital for an environmentally friendly project is lower than the cost of capital for a carbon heavy project. And so you're seeing capital moving in that direction. Investors broadly are demanding it, and so that's the way that the economy is going. And so I think we're at the beginning of this journey. I think there's a huge opportunity, both for investment spending, and this won't have to sit on government balance sheets. This can come largely from the private sector. That will lead to, I believe, meaningful job creation over the next period of time. You just think of the infrastructure spend that's required and the type of jobs that can get thrown off by that infrastructure build. And so I think it's a terrific opportunity, and it'll help drive the recovery from what we're all going through right now.
I hear from a lot of policymakers, the need for bigger and better carbon markets, or better functioning carbon markets. What's the role in banks in that?
I think, look, this is a really important topic. Carbon pricing has been a topic that's been with us for some time, and I think if we're honest with ourselves, it's really not been that successful. So you look at the average carbon price, and it obviously varies around the world, but the average carbon price is order of magnitude $3 right now. That needs to get much closer to sort of $75, $100. I mean, that's where the European policymakers would like to see it. And there's the potential for a mandatory drive at this. The border tax that the EU talks about, we'll see if they can get that done, but that would obviously be a move in the right direction. And in many ways it makes sense. If you're going to force your economy to go to net zero, why would you expose it to carbon leakage from other parts of the world? And so if carbon unfriendly products are going to be coming into that economy, having a border tax, you can see how that works. But obviously that's a complicated thing to get resolved. The US position now makes it potentially more likely. So that's one drive. But then there are obviously voluntary markets, and from a consumer point of view, consumers wanting to have net zero carbon products, corporates wanting to get to net zero, and you see the list of corporates that are signing up to those commitments growing day by day. And so trading carbon is going to be for real. The demand for it is going to grow. And so the question is, how do we bring this together in one place? This is a real opportunity for London as a financial center. If London could be the center of a global carbon market, which was deep, which was liquid, which was accessible, where there were markets, OTC markets potentially, but markets with common standards and structures, and so people could satisfy their needs, whether they're buyers or sellers, and I think we're going to see that grow.
Richard, when you look at what the fourth quarter has been like so far for your bankers and traders, what can you tell us about volatility? What can you tell us about what's in the pipeline if we do have encouraging news for the vaccine? If we have it sooner than expected, does it mean much more activity with IPOs, M&A, and the like?
Yeah, look, throughout this year, there's been a huge amount of activity, and you've seen that in bank results. That activity clearly continues. The speed of recovery, the pace of recovery, continues to be strong and robust. We've all seen the vaccine news of the week. The expectation is that we'll see a lot more vaccine news over the coming weeks, and so I think what we can see now is a bridge to sometime next year. Let's call it the spring. And this vaccine really being deployed, broadly by that point in time, and so really the beginning of being able to get back to a more normal existence and starting to put some of the lockdowns that we're currently going through behind us. So you can start to see a bridge. Now we'll have to see how this plays out, but I think you can see that, and that was obviously a great accelerator to the markets this week. We'll continue to see that. But I think there are two things you need to think about. One is the speed of recovery, the growth rate, but I think you also have to recognize the levels from which that is coming. And obviously, today we saw great UK data, but from a very, very low level, and I think that's broadly the case around the world. And so as we go into next year, it's still going to be a year of recovery, of growth, albeit from relatively low levels. We shifted our S&P forecast for 21 yesterday, and you've seen those numbers. But broadly, I think equity markets, this is capital appreciation plus dividends, somewhere in the high teens in terms of driving returns next year, quite possible, albeit from relatively low positions. I think the transition. I think this is maybe the real key theme here. Transition and rotation. Performance year to date has been really driven by those companies, as we've seen, which would thrive and prosper in a acceleration towards a digital world, and that'll continue. Those are secular growth trends. But companies which have really prospered from a sort of stay-at-home economy, if I can use that phrase. But as things start to open up again, and people see the prospects for opening up as we go into next year, there's clearly the chance for those companies to rebound. So if you look at the performance of some of the airline stocks, travel stocks, leisure stocks, over the last few days as this vaccine news has come through, that's been significant. So growth in those company share prices, but albeit from relatively low levels, and that'll drive some of those returns that we're talking about as we go into next year.
Richard, thanks so much. Richard Noddeder from Goldman Sachs. He stays with us, and we'll talk a little bit more about Brexit and some of the things coming up from now until the year end. Coming up, as President-elect Joe Biden picks his White House Chief of Staff. We'll also talk U.S. politics a little bit later. That's in about 30 minutes from now with Leslie Vinger-Murray. Up next, more with Richard Noddeder. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get back to our exclusive conversation with Richard Nodde from Goldman Sachs International. Richard, thank you so much for staying with us. What's the best hope right now for UK financial services in negotiating Brexit in this late hour?
Yeah, believe it or not, this is a topic we've been talking about for just over 4 years now, 4.5 years. So I think all the major firms are well prepared, for the move, and are working on the assumption that there won't be a deal, there won't be equivalence, and so to the extent there is, it's upside. I think what's really important is that the UK, from a regulatory point of view, from a infrastructure point of view, stays a place that big financial firms want to be, to service the global markets, because there's obviously more than the EU. The EU was a very important part of the business being done in London, but it wasn't the only part by any stretch. And I think there's obviously going to be some shift of business from here into the EU. That's what everybody seems to want. So the challenge is how do we grow the global business, and markets continue to innovate. And we had this discussion a few moments ago about the carbon market. Is that a market that can come here? You go back in time, when the atmospherics around China was maybe slightly different, the offshore renminbi market, being situated here. So London has to continue to innovate. There's plenty of opportunities for growth. There's going to be massive infrastructure financing requirements around the world, and if London can play its role in all of that, it'll have a bright future. Clearly, some of the activity, Europe specific, will migrate onto the continent.
When you look at working from home, how much can you help staff in the second lockdown? And actually, are you looking, as some of your peers, in then hiring some kind of WeWork style, buildings for the future?
Yeah, if you go back to March, when we were really moving full speed into a work from home environment for the first time, the question was, would it work? And I think we all learned that it could work, and it absolutely did work. And so, going back, we knew that this could function. The question is, for how long does it have to function? If this is a matter of a month or two, I think that's quite doable, and we have the infrastructure in place. We invested quite heavily in terms of incremental infrastructure for many of our people at home, so they had better systems, better technology, and were able to operate. But I think we also saw that between the lockdowns, there was a real appetite from our people to get back into the office, to reconnect with their colleagues. The benefits of the social dimension of the workplace in terms of brainstorming, exploring ideas, and actually just doing things together. I think people found those conversations in many ways to be deeper, more nuanced, potentially more creative. And so I think a combination of both. But I think we're able to manage both. But clearly we would hope that we can get back to a situation where, to the extent our people felt comfortable, which many of them have demonstrated they do, can get back to the office and get back to a more normal existence. But retaining, which I think is a really, really important point, the flexibility, and I think that creates opportunities for many people, just having incremental flexibility in where they're spending their time. So spend time in the office when you need to. If you don't need to, you can work from somewhere else.
Richard, thank you so much. Richard Nodde there, the Chief Executive of Goldman Sachs International. Coming up, we have more markets and more politics. This is Bloomberg.
Morning, ladies and gentlemen. It just new order arrived. I'm placing an order to sell short British pound at 131.84.2. Okay, 131.84.2. Let's see and let's wait.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Short position opened on British pound at 131.84.2.
Another grim milestone, global virus deaths jump by the most on record. Cases worldwide top 52 million, markets head lower. Recovery derailed, the UK economy sees record growth, but the rebound leaves it far behind its peers as a new lockdown looks set to bite. And President-elect Biden starts to name his cabinet. Ron Klain will be his chief of staff, one of the most powerful roles in Washington. Biden says bringing the pandemic under control is his top priority. Well, good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lack in London, Tom Keene in New York. Tom, very important to look at the treasury markets and kind of follow that rotation that we saw to see where it ends up. We look at, of course, politics in the U.S., a transition period, which I have to say is pretty bewildering if you're looking at it from the outside.
Yeah.
And then we look at the U.K. and oil.
Well said. It is bewildering, and trust me, I'm a political junkie on this, Francine, and I'm as confused as you are. I know we've got a guest here in a couple of minutes that maybe will provide clarity. The 10-year yield, the data check here, we'll do it in a minute. The yield comes in a little bit off Veterans Day yesterday in America with the bond market shut down. But Francine, I'm not going to mince words. There is no other backstory in America right now than the pandemic. It has pushed everything aside, including this election.
Yeah, I agree. So we'll have plenty more, of course, on that. Let's get straight to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, the state of Georgia will conduct a hand recount of ballots for the presidential race. Joe Biden leads President Trump by a slim margin of about 14,000 votes out of roughly 5 million cast. The Trump campaign has alleged there were widespread voting irregularities, but it's offered no proof. President-elect Joe Biden has named longtime aide Ron Klain to be White House Chief of Staff. Klain played a leading role during the economic and public health crises of the Obama administration. The job is one of the most powerful in Washington. The person is the gatekeeper for the president. And Moderna is now poised to take the spotlight on a coronavirus vaccine. The company says its study has accumulated more than 53 infections that will allow a preliminary analysis of its effectiveness to begin. Moderna didn't predict how long it could take an independent monitoring committee to analyze the data. The International Energy Agency has cut forecasts.
I also place an order to buy British pound at the price 131.84.8. New order placed to buy at the price 184.8. Okay, see.
Jettisoning prime brokerage, and BNP picked that up as well. Now, Bloomberg has learned that BNP Paribas, in that transaction with Deutsche Bank, is being scrutinized. That's the language we're using, scrutinized by French regulators over a fee to a middleman. It will go on to say this involves a former Goldman Sachs banker. I guess, Francine, you could have asked Mr. Note about that. That would have made him happy. But there you are, as the French look at this. Francine, what does it mean when we scrutinize?
Well, it means that, innocent until proven guilty, but it certainly looks like an investigation, Tom, right? This is probably how I would characterize it. And again, if it's the French regulators, I guess we just have to wait and see. And I know our reporters will call to try and figure out if there's anything more, but we'll know certainly from the regulators in a couple of weeks what that report found. Could be nothing, it could be significant. Again, some of the biggest things start from nothing.
The order to buy was cancelled. Moved too fast, too far. I'm cancelling the order to buy British pound. So we have only one short position on British pound and one at 131.84.2.
The yield was a 9.97 before Veterans Day. We come in a solid 3 basis points, 0.94, much more normative there. Oil ebbs away. Fractionally, I'm just going down in flames here, Francine. You got to save me. Sterling, 131.97. Save me.
You know what? I'm saving you by also showing you Burberry.
There we go. There's a data check that matters.
Spot. The figure, look, sales weren't great, but actually it was better than expected. So sales dropped less than expected, and you can see Burberry gaining some almost 3%. It was gaining at some point more than 6%, but it's very clear that the global stocks rally is easing, investors assessing whether the equity markets had overheated, and this with the backdrop, Tom, of a deteriorating coronavirus situation.
And your final data point there, Francine, is a reversible check and monogram cashmere scarf from Burberry. Pricing in at $620. I can see it under the liqueur.
3 standard deviations.
Three standard deviations.
Let's talk about U.S. politics.
Leslie's taking notes. What's it called?
Joe Biden has named long-term aide Ron Klain as his White House chief of staff. Meanwhile, the Republican senator from Oklahoma, James Lankford, says he'll intervene if the Trump administration denies Biden access to daily intelligence briefings by the end of the week. Well, joining us now to discuss the transition, to discuss what the future of a Biden administration actually brings is Leslie Vinjamuri, Chatham House, head of the U.S. and America's program. Leslie, thank you once again for making us wiser on the world of U.S. politics. When you look at the transition, so you have the Biden camp basically, trying to take charge going ahead, and you still have from people in government saying we need recounts, this is not done. I mean, how does a common person actually deal with these two sides?
Well, I think at some level it's probably what many people expected from President Trump, not one to take bad news well. But as the numbers come in, it's very clear how decisive the electoral result has been. Recounts for slim margins are not uncommon, but of course these aren't slim margins. We're talking about 20,000 in Wisconsin, something shy of that in Georgia. So what the Biden campaign, the Biden team is doing now is very wisely moving forward, trying to communicate. As Tom said, the number one story right now is the pandemic, the devastation it's wreaking. And the Biden team is clearly communicating its commitment to moving forward, to giving a steady message on masks, appointing that coronavirus task force. And Ron Klain, of course, dealt with Ebola for President Obama, really understands the significance of this and has worked with Biden, has helped him for 30 years. He's very well known, very well trusted. So I think the signals that are coming out of the Biden team are all good ones. And they are, waiting to be given the key so that they can go into the executive branch and begin that process of transition. And thank goodness that this is a team of people who know Washington who know the executive branch, who know the issues very, very well. If it was a newcomer to Washington, the fact that they're being held up by the Trump administration would be far more worrying than it currently is.
Leslie, what have we found out about who will surround the president like Joe Biden? Do we have any insight into who he'll have in his administration?
Well, he has indicated that he's going to wait until Thanksgiving. I think the presents are coming slowly. For those who are very curious to know, I think we all have the list of names in our mind of who we think we're likely to see. Of course, he's released the information on the transition teams. So that's something that people are poring over. But I think a lot of people are assuming that the Secretary of State pick is going to be Susan Rice or Senator Coons, Michelle Flournoy in defense. Lael Brainerd seems to be the favorite in Treasury. So I think the names are fairly, they're in circulation, but of course things can change, and one eye is always going to be on the Senate and what happens in that January 5th set of runoffs in Georgia. And remember that, the very important point on those January 5th runoffs is that it means that effectively the Republican Party and also the Democrats are in campaign mode all the way through January 5th. And that's certainly going to affect what happens in Congress. It might mean that we don't get any fiscal stimulus until after January 5th and after January 20th, which of course is not good news and probably wasn't good news for the Democrats if you look at what's happened in the House.
Leslie, let me bring up the question of the day, and this goes back to Mr. Klain. Full disclosure, folks, I've interviewed him a number of times. Okay, Ron Klain is a brilliant kid out of Indiana, worked with Al Gore, et cetera, et cetera. He was instrumental in getting Ruth Bader Ginsburg through the process to become a Supreme Court justice. Great. The first question that's going to be asked is Mr. Biden piecing together Obama 2. How do you respond to that?
Well, I think that, if you're a president-elect looking at a country where hundreds of thousands of Americans have died and thousands are dying every single day, and there's no plan for getting the country back into control, where you're facing rising geopolitical challenges from China and others, and any number of issues, and 4 years of wrecking by President Trump on any number of democratic norms. What you don't want is to start with people who don't really understand Washington, who don't have the experience, who don't have the context. So certainly a number of people with deep experience are coming back on board. It looks like a very moderate team. We're not seeing progressives rise to the top of the list so far. We'll have to wait and see. But I think also, most of the names that are coming up are experienced, but very much on the front foot with respect to their focus, their energy. So I think it's good news.
Leslie, Mr. Langford of Oklahoma, deeply devout, a true evangelical, there's no other way to put it, has made very clear this president-elect needs an intelligent briefing. Is Mr. Trump starting to lose his absolute core conservative base when you hear Senator Langford say, let's go?
Well, I think this is the question, and this is the judgment that people like Mitch McConnell and others in the Senate must need to make very soon. At what point are they holding back America's progress, the transition, beyond a moment where their supporters are going to find this advantageous? And as the numbers unfold, as the rest of the world begins to really acknowledge and accept the president-elect, Vice President Biden, as the American public moves forward, I think at some point this is going to cost the Republicans quite a lot. But again, it's that calculation. What do you do to keep the base mobilized, to keep energy around the party leading up to the January 5th elections in Georgia? Because, of course, control of the Senate is at stake, and that's incredibly important for the domestic agenda.
Leslie, thank you so much. Leslie Vinjamuri there from Chatham House, head of U.S. and the Americas program. Now, up next, we speak with Jane Foley, Rabobank head of FX strategy. We'll talk, of course, about the election and what happens to dollar. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, joining us to talk about U.S. and, of course, to talk about everything else is Jane Foley, Rabobank head of FX strategy. Jane, I know Tom, who's been very upfront, actually, dominating really some of the Turkish lira moves ahead of them, wants to talk Turkey. But what does the Joe Biden election, what does vaccine actually mean for dollar going forward?
Well, I mean, I think particularly with the vaccine, it is good news. Now, it's quite interesting because we have seen since Monday and that Pfizer news, we've seen a lot of politicians and central bankers, begin to push back, say, look, we're in for a couple of bad quarters still, a really difficult winter, both from a health perspective in Europe and the US, and of course, economically too. And yet, what we've seen, I think, from the markets really since the global financial crisis and that advent of huge amounts of quantitative easing and cheap money is the market's ability to be sensitive to bad news is sort of cushioned. The blanket of cheap money is provide exactly that, a safety blanket. And the market tends to look through bad news perhaps a lot swifter, a lot quicker than it would have done before the global financial crisis. So I think the market has a tendency to ignore the fact that we do have a couple of bad quarters, price in perhaps a better time ahead. Yes, there's been a little bit of position adjustment since the movement, that rotation on Monday, Tuesday, but I think it probably means that the likelihood we're going to see a big surge in the safe haven dollar is now far less likely.
What do you do with some of the other havens, Jane? What do you do with Swissy? What do you do with yen?
Well, for dollar yen, I think it's just going to hold around 105 now for quite a while. I think one thing that's really quite interesting, and perhaps the market might have mispriced, is a relationship between perhaps Biden and China. The market consensus is that the relationship between China and the US in this presidency won't get worse, perhaps at least not until we come up for the next US election in 4 years' time. And if there's a play by the electorate, suspicions by the electorate towards China, maybe then he'll become more hawkish. But actually, looking at the conversations that Biden had yesterday between the prime ministers of Japan and the prime ministers of Australia, they appear to be trying to make him come out and make his stance about defense in the region. And this, of course, is particularly worrisome to them, to Asian countries, the build-up of military hardware in China, for instance. And that might mean that we have some pressure on the president to actually make clear his stance about China, perhaps sooner than the market is anticipating, and perhaps he could be more hawkish.
Jane, I want to talk about the move we've seen in Pacific Rim EM. I mean, seen off ADXY, but just looking at dollar Sing dollar, dollar Taiwan, and the rest of them, they're riding two standard deviations of persistent move to stronger EM currencies. Does that sustain, or do you just assume a regression to the mean where they go weaker at some point?
I think for the time being, I think with the Biden upswing and with the vaccine upswing, it's not a move that I'd really want to stand in the way of right now. Certainly, it does seem that there's been a big push back into EM, and then actually data is suggesting that we began to see that really last month, a big move back into EM last month. People again taking a look and moving back into to higher risk assets, and that perhaps is in tune with that rotation trade that we saw in stock markets on Monday as well. So unless we saw risk appetite really taking a dive for the worse, I think that's a move that perhaps is going to be comfortably here for the time being. Now, the vaccine hope, as I say, does give a big insulating, a big push to that risk on trade. And yes, they're going to be risk off days, certainly, but I think that the market move is certainly more positive now.
Euro goes 117 to 121. Europe gets a little upset over trade dynamics. Do these EM nations, these Pacific Rim nations rather, do they get upset about strong currency, or do they just take it as it comes?
I think they would probably rather have weaker currencies. I mean, we're in an environment where inflation is really quite low, or very low in many respects. In that environment, I think we can take it as a given that generally speaking, central banks, economies would like to have or favor a weaker currency to try and get inflation back on track. And aside from that, there is this big push of trying to perhaps relocate some businesses out of China back into the Asian region. There will be some competition between some of those nations are trying to get some of that business, that onshoring business, for instance. So from that point of view, a softer exchange rate may work in their favor. So for a majority of countries right now, we're certainly not talking about Turkey here, but a weaker currency would be to their advantage as long, of course, as it was controlled.
Jane Foley with us with Rabobank. Lots to talk here about the deepest market, arguably the litmus paper of the international system on foreign exchange. And we'll continue this conversation with her at the beginning of the next half hour. Right now, futures at -3, Dow futures -130. A churn, NASDAQ futures go positive the other way. And other than that, it's remarkably quiet. Lira actually right now flighty, but weaker, stronger Turkish lira. On Balance of Power with David Weston, Mr. Cerullo, the former Federal Reserve Board governor. This is Bloomberg. Good morning.
energy history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. China's ByteDance has asked the Trump administration to extend today's deadline to sell its TikTok business in the U.S. In August, President Trump demanded that the app be spun off because of concern about American users' personal information. TikTok has struck a deal to sell part of its business to Oracle and Walmart, but the deal isn't final. Siemens is forecasting a modest increase for growth in 2021 after a tough year for industrial companies due to the pandemic. Still, Europe's biggest engineering firm warns that some coronavirus-related challenges remain that could cause customer investments to lag behind economic growth. Wells Fargo is considering whether to sell another of its businesses. Bloomberg's learned the bank is exploring the sale of a unit offering store-branded credit cards. Wells Fargo also is gauging interest in other businesses, such as asset manager and its student loan portfolio. And that's your latest Bloomberg Business Flash. Tom, Francine.
Vertica, thank you so much. Now let's look at the markets. The market's definitely focusing on the rotation that we saw and treasuries after a closed day yesterday back. So I'm looking at Treasury 09390 and Burberry. Tom, this was quite significant because sales were down a lot, but actually it was better than expected. And so on the back of that, you saw Burberry bounce back quite nicely, now gaining some 3.2%. Overall, the million-dollar question or gazillion-dollar question in European stocks is, did the rally go far, too far, and actually, were markets overheated? I think that's the main question that markets have been trying to figure out over the last 2 days or so.
Well, we saw yesterday maybe a return to the kind of dynamics we saw previous, but we'll have to see here day by day to say the least. The data here, red and green on the screen, the VIX 23.74 speaks volumes as we come in from a 41 level as well. On dollar weakness, with Jane Foley with us, we'll get back to her in a moment. Yen 105.32, Euro 118.12. It'll be really interesting to talk to her about Euro dynamics as we just looked at the Pacific Rim. And I'd also want to point out, maybe we'll touch on Turkish lira as well. On the diplomacy of the United States with Turkey, there's no one better to speak with than Robert Hormats of Tiedemann Advisors, the former ambassador on the changing of the guard in Washington. Robert Hormats on our new diplomacy. Please stay with us worldwide. This is Bloomberg. Good morning.
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, the UK economy recovered some of the ground lost to lockdowns in the third quarter. Its recovery, though, much weaker than other wealthy nations, highlighting the toll that the pandemic has taken on Britain. Well, joining us now to talk about that, to talk about Brexit, is Therese Raphael of Bloomberg Opinion. First of all, Therese, congratulations on, I think, one of our most read opinion pieces, which laid out on why you thought millennials would get the vaccine or should get the vaccine first. But if we move on from that, maybe we'll come back to it. What is Boris Johnson's biggest headache right now? Is it the economy? Is it Brexit? Or it seems there's so much talk also about things in Downing Street not going to plan, with aides leaving and aides joining.
Yeah, I think this morning his biggest headache is very close to home. For some time now, we've been hearing that the Prime Minister wants to appoint a chief of staff, and it emerged in the British media that his choice was Lee Cain, a very long-standing advisor who'd been with him at the Foreign Office and had been with him through his rise in Downing Street and his election majority in December. That was not to the liking of others in his party, and Lee Cain has now resigned, and that's created a big storm. Now, the government has said, look, there's nothing to see here. This is just a bit of reshuffling of the chairs within Downing Street. It's a communications job. This is not really what the public want to hear. It's not what they care about. But actually, it goes to the heart of what many people have questioned about this government, and that is, who's driving it, what is the vision behind it, and where is the real sort of management expertise. So I think we are going to see this story have some cut through with the public, even if there are so many, ostensibly bigger issues, the economy, the vaccine, the relationship with the new White House, that are also, vying for attention right now.
Therese, what does this exit in Downing Street actually mean for probably the most controversial but also closest ally and advisor to Boris Johnson, Dominic Cummings?
Yeah, well, that's an open question. Cummings has hung on through a lot of ups and downs, including huge criticism when he broke lockdown rules before, and he's very close to Lee Cain. And I think the question that this raises is whether this very core group of hardcore Brexiters that formed the Vote Leave campaign that really propelled Johnson to office and into his position of power, whether their influence over the government is waning now. And a lot depends, I think, on how this plays out in the backbenches of the Tory party. So Johnson is often accused of not doing enough to help MPs keep them informed of his policy, help them understand what he wants, bring them along and get their support. And I think we're going to have to look at how MPs respond to this and whether we see a backlash really against Cummings rising up out of this Cain resignation as well.
Therese, I'm fascinated by this as an outsider, and of course you bring over the equivalencies to the White House and what the First Lady would do. I was reading the Telegraph, and they do it in a more, political way than your elegance and all that. And they've got Team Vote Leave, and they've got Team Carrie for Carrie Simmons. I believe that's how you pronounce it. What is Carrie Simmons doing, intruding on this process, as they say at the bottom of the Telegraph article, because she got upset about photos being posted on Instagram? The Prime Minister of the United Kingdom's dealing with this?
Well, I think there's, so much going on behind the scenes here, Tom. We also have the appointment of a new communications head for Johnson and Allegra Stratton, who used to work for Rishi Sunak. And was also apparently not happy with the Cain appointment. So, you've got obviously various factions within Downing Street. And the important point, I think, for those of us who care about Brexit and the economy and the vaccine, is who has the most influence over Boris Johnson? Who is controlling access to Johnson? What is their vision? And right now, that's not clear. And that's why this internal spat over a head of communications is actually a much bigger story than you might first meet the eye.
I agree, but what is the response of the Prime Minister, or is it unknowable right now?
Well, I think we will have to wait and see what the Prime Minister himself says. And, maybe it says something that he hasn't spoken up more on this so far. So, he's going to try to keep the focus on his policies. But, one indication of how worried they are was when you had, a government minister on BBC this morning saying we should be focused on, the growth figures, which are pretty dismal right now. And I think when the government is telling us to look at dismal economic figures, they are very uncertain about what's going on within Downing Street now. So, this is still playing out. We don't have a new chief of staff announced yet. And the person that takes over that position is going to tell us a lot about the direction of this government, Tom.
As the world turns with Therese Raphael, thank you so much. Bloomberg Opinion, just absolutely extraordinary to read some of this, folks, and to try to make sense of it from a distance. Let's get back to something predictable like the foreign exchange market. Jane Foley with us with Rabobank. Jane, I want to look at euro here. We did have a bout up to, I believe, a 119. And, as a major pair with some huge dynamics on the continent of Europe. Let's just start with square one. What's the fair value of euro right now? The appropriate level of euro is calculated by Rabobank?
I think we're settling, quite close to it. And to be honest, I think in the months ahead, we will see perhaps less volatility than we've seen so far this year. But maybe we're going to see something like a 116, 120 range. I mean, I know you cited 117, 121 a little bit earlier on, but I think perhaps a little bit lower. We still have, of course, in December, that important ECB meeting coming up. I think for Euro bulls, that might be a little bit difficult. The market is long Euro already, and I think that position could be a little bit under pressure ahead of that ECB meeting. Everyone's expecting more policy stimulus, but a large part of the dust settling, I think, for euro dollar will be trying to work out, what is the direction of the dollar under Biden, under the vaccine sort of news, but also I think there is still a lot to be digested in the eurozone. So, for instance, if we look back into the spring, if we look back into May, one of the reasons that the euro fundamentals were perceived as being really improved was that big step forward that European politicians took with the recovery fund. And yet, of course, as we move into this quarter, yes, this week they took a step forward in agreeing structure for their budget, but there's still a lot of detail to be thrashed out with the recovery fund. And meanwhile, we have countries like Italy having to pledge more fiscal response, but already, the weight of debt is hanging over the Italian government, and there could be a lot of fiscal pressures in the mix over the winter, which may not do too well for the euro. So I think, given the market is long, I don't think we're gonna really breach that 120 level. I think we'll see position adjustment profit taking every time we go up close to that level.
Jane, what happens to euro if there's a vaccine quicker than expected?
Well, clearly that's going to really help the market look through what is likely to be a very painful winter in terms of Eurozone growth and the amount of cases that we're seeing in Europe right now. But on the other hand, I think it's going to be something which really asks the question about, well, what happens to the dollar? Because the dollar, after all, is behaving mostly as a safe haven in this year. And therefore, we can expect perhaps that the dollar will soften. But that said, on the other hand, the market may begin to look at the dollar in a more constructive way if Biden puts together his task force, if he starts to really thrash out a better plan with respect to coronavirus over the winter for the US economy. So I think there's a huge amount of factors in the mix, and that's why I think we're going to bounce around perhaps between 116 and 120 for the next few months as the market really does begin to find its feet in these new sort of regimes, and as it looks ahead to the vaccine era and it looks ahead to the Biden era.
Brexit disruption is arriving, Jane, at your end, and if you speak to a lot of chief executives or industry lobbies, they'll say that the disruption will come even if we find a deal, just because in certain parts of the economy they're not ready for it. What does this mean for pound?
I think it means it's still going to be political clouds ahead in the following year for the pound. It is quite interesting because if we look perhaps at the deal that the market was hoping for in terms of the EU-UK trade deal, perhaps 2 or so years ago, the market was expecting perhaps there'd be something quite comprehensive. Now we think, well, look, if there is a deal in November, it's likely to be a skeleton deal, something that perhaps will impact some of the manufacturing sector, but perhaps leave large swathes of the services sector a little bit exposed. So that's going to mean that any deal, whilst it might create a little bit of a relief rally in sterling, that relief rally is going to be short-lived and perhaps, really won't run very far, particularly when everyone's expecting large queues of lorries at the borders come January the 1st, with confusion perhaps for lots of different industries. And then, of course, we go ahead to what is perhaps going to be a very difficult new year for Boris Johnson. The public tired of all of these policy U-turns, tired of all the headlines that we're seeing in the newspapers like today, that the pressure between MPs and Downing Street. And, the question ultimately is that will Boris Johnson remain in his job for another year or so? And that's very difficult to answer right now.
Jane Foley, thank you so much with the Rabobank this morning. And Therese Raphael, thank you so much as well with Bloomberg Opinion. With our news in New York City, our first word news, here's Radhika Gupta.
Thanks, Tom. President Trump suffered 2 setbacks as he tried to claim victory in the state of Arizona. The state's Republican Attorney General told Fox Business it was highly unlikely the president would catch up when remaining ballots are counted. He also said he has found no evidence of widespread fraud that the Trump campaign has alleged. President-elect Joe Biden has stocked his transition team with policy experts, academics, and former Obama administration officials. That's a contrast with the industry-friendly figures that President Trump appointed. Biden's team includes people who favor stronger government regulation than the current administration. Still, liberals are concerned about the number of tech executives Biden has included. The American pandemic's longest increase in coronavirus infections appears poised to get even longer. The nationwide rise in cases is now in its 9th week. Authorities reported more than 145,000 new cases yesterday, an all-time high. And the 7-day average for deaths has climbed above 1,000 for the first time since August. Global News 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Radhika Gupta. This is Bloomberg. Francine Tom.
Radhika, thanks so much. Now join us next week for Bloomberg's New Economy Forum, where you can watch live on Bloomberg TV, the Terminal, and the Bloomberg New Economy social channels on Twitter and Facebook. We'll, of course, focus on China. We'll focus on multilateralism going forward. We have a great set of exclusive interviews. This is Bloomberg.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
we're well on our way to well over 200,000 cases a day. Our healthcare systems are already overwhelmed in many locations in the country, and that is only going to continue to increase as these new numbers add up. And they are, in a sense, you might say, already in the pipeline if we don't have some immediate action for people to distance themselves from sharing air with other people, which I don't see happening. So we're going to have a serious crisis, much more than we've had already, just within the next, weeks to months.
Maybe the abrupt shift that we've already seen from Trump to Biden there. Mr. Osterholm, Dr. Osterholm, his book, Deadliest Enemy, is definitive on the virulency of the pandemic viruses and also, of course, on bacteria as well. He will be part of that task force. Right now, our task force in pharmacology, always led by Sam Fazili of Bloomberg Intelligence. Sam, a small item yesterday in the zeitgeist, which is all these fancy drugs are rich world drugs. Peter Hotez of Baylor Medicine has been on the show adamant that the poorer parts of the world need cheap, traditional pharmacology. Which is it, or do we do both?
Hi, Tom. So I think he's hit the nail on the head there. It might be possible for us to organize the distribution of a vaccine that needs a minus 70 degrees, 94 Fahrenheit, storage around the U.S. and Europe, but I'm sure you can't really do that to the majority of the world where the large part of the global population live. So you're going to need to have vaccines that just need basic fridges.
What is the state of traditional vaccines as Dr. Hotez is studying?
Yeah, so obviously China leads on that a little bit with Sinopharm and Sinovac. They had some very serious short headline news yesterday saying that their vaccine was 100% protective. We need to see the data. We do have those vaccines in development in Europe and the US. Novavax is developing a traditional vaccine that should be in phase 3 in the next few months. Valneva of Europe is doing that with the killed virus. And of course, you've got Glaxo and Sanofi that will be working on that traditional vaccine starting again in 2021.
Sam, what can you tell us about Moderna? So, this week it was all about Pfizer. It seems that we're expecting some kind of trial analysis from Moderna. Could they surpass Pfizer and give us even better news?
So going beyond 90% would be amazing and therefore unlikely. One case in one group, extra or less, just really changes on these low numbers of cases, the statistics that come out. So if they come out with something in the 80 to 90% range, I will be very happy.
How difficult? I mean, Tom, I can't say enough about how much I love speaking to Sam. Also, because he knows everything. We were talking about testing yesterday offline and the difference between antigen and PCR and things like that. So, Sam, you're probably one of the few that can explain also, the difference of this vaccine by Pfizer compared to what Moderna is doing. Is it the same basis, but one could be quicker, or is it just from a different premise?
Yeah, so they do have slight differences. The basics are pretty much the same. When you looked at the data in the earlier trials, some differences emerged. I asked Pfizer why they had the slight difference there. They said, we think we know the answer, but we're not ready to discuss it yet. Some minor immunological differences. Whether that means anything with regards to the actual data outcome, time will tell. But I do tell you this, the time difference between the two doses of Pfizer and Moderna are different. One's done within 3 weeks, the other one's done within 4 weeks. Will that make a difference? I don't know.
Sam, I'm looking at the log vectors of deaths of this virus. For example, in New York State, which is doing fine, New York State is doing less than fine right now. Do you, as an expert on this, perceive the deaths now, the hospitalization, and the cases is the same as what we saw 6 months ago, 8 months ago, or is it a whole new construction now?
Yeah, no, Tom, I certainly hope, sincerely hope that it's not the same. Catching the infection is probably just as bad and worse now because so many more people have got it. And you can see by the data, we went from 1 million to 2 million in 44 days and 9 to 10 million in 10 days. So this is in a pretty awful exponential phase in terms of infections. but we've got better at deciding who goes to hospital. Younger people are catching it, which is not good, but at least they don't need hospitalization most of the time. And the deaths are to do with much better clinical care and medical care with a few drugs that have shown some positive help there.
Sam, thank you so much. Sam Fazeli there of Bloomberg Intelligence. Now, coming up in the next hour, we continue tracking COVID-19 with Jason Farley, Johns Hopkins nursing professor. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
This is Bloomberg Surveillance. I'm Ritika Gupta with your Bloomberg Business Flash. Nissan is forecasting a 28% smaller operating loss for the current fiscal year. That's leading to optimism that the Japanese automaker is regaining its footing after the coronavirus hammered sales. Nissan has been cutting costs, reducing capacity, and restructuring the business. Apollo Global's $2.5 billion bid for Great Canadian is running into investor backlash. Bloomberg has learned that some who own large blocks of the casino company plan to vote against the deal. They believe the takeover offer is too low. And apartment leasing in Manhattan rose for the first time in more than a year. The number of newly signed agreements jumped 33% from a year earlier. But to make the deals, landlords had to offer a number of discounts and freebies, such as 3 months or payment of broker's fees. And that's your latest Bloomberg Business Flash. Tom, Francine.
Ritika, thank you so much. Now, in the last hour, we spoke exclusively with Richard Nade, the Goldman Sachs International Chief Executive. We discussed the future of London, banking amidst the pandemic, and of course, a changing UK and EU landscape.
I think what's really important is that the UK, from a regulatory point of view, from a infrastructure point of view, stays a place that big financial firms you want to be. to service the global markets, because there's obviously more than the EU. The EU was a very important part of the business being done in London, but it wasn't the only part by any stretch. And I think there's obviously going to be some shift of business from here into the EU. That's what everybody seems to want. So the challenge is how do we grow the global business, and markets continue to innovate. And we had this discussion a few moments ago about the carbon market. Is that a market that can come here? You go back in time, when the atmospherics around China was maybe slightly different. The offshore renminbi market, being situated here. So London has to continue to innovate. There's plenty of opportunities for growth. There's going to be massive infrastructure financing requirements around the world, and if London can play its role in all of that, it'll have a bright future. Clearly, some of the activity, Europe specific, will migrate onto the continent.
When you look at working from home, how much can you help staff in the second lockdown? And actually, are you looking, as some of your peers, in then hiring some kind of WeWork style, buildings for the future?
Yeah, if you go back to March when we were really moving full speed into a work from home environment for the first time, the question was, would it work? And I think we all learned that it could work, and it absolutely did work. And so, going back, we knew that this could function. The question is for how long.
Mr. Doty of Goldman Sachs International, their Chief Executive Officer as well. On the data front, well, let's turn to the market, red and green. NASDAQ 100, we're sort of reverting back to where we were before the vaccine/election surge. We'll have to see how that plays out here into the weekend, not just Thursday here, but into the weekend as well. I should mention economics, an inflation report in the United States coming up later as well. Coming up in our next hour, really looking forward to this. Ambassador Hormats will join us with all the changes on diplomacy, the changes in America. Robert Hormats. This is Bloomberg. Good morning.
better than expected, not only in terms of job creation, but also a sharp fall in the unemployment rate consistent with higher labor force participation. That's really good news.
Overall, the gain was solid, but even while this is a very robust pace of job gains, it's a lot slower than it has been in the summer months.
Great that we saw the job gains we did, but they still are diminished from what they were, of course, back in April and May. And the scarring, the sort of wounds that were created by COVID are beginning to fester.
I would caution people to look at the top line number because I don't think it tells the entire story. Employment relative to population is still well below where we were pre-crisis, and that's because I think that we're going to have some lasting damage.
Depending on what you look at, jobs creation or the unemployment rate, you have different views as to whether the improvement in the labor force is keeping up or slowing down.
for the economy is extraordinarily uncertain and will depend in large part on the success of efforts to keep the virus in check.
They are torturing themselves to explain that they're there, ready, willing, and able.
The Fed has basically done all it can do, with the exception of extreme emergency measures.
This morning, and well, the day after an appearance by the president at the tomb of the unknown soldier, there are too many unknown unknowns. When will the president-elect receive his first intelligence briefing? When will the Pentagon order troops out of Afghanistan? When will Washington understand America's hospitals? They are near full. There is a countdown clock, 69 days to the inauguration, and this is known. Markets, they churned this morning a disinflation report at 8:30. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York. Francine Lacroix in London. And the ramifications, Francine, she's looking at her terminal right now because the news is truly breaking right now, folks. And this goes off of what we heard from Lord Patton yesterday and others, a United Kingdom response to the lessening of liberty in Hong Kong.
Yeah, Tom, I have to say I was quite, not surprised, but I was, quite, let's say, interested in the really strong words that Chris Patton was saying yesterday. Now, we knew this was serious, of course, with the opposition over in Hong Kong resigning all at once, but the way that Lord Patton was talking about it yesterday did make us feel as though the UK government would also be behind him in trying to do something to stop China from continuing further with Hong Kong. And as you're saying, look, it's very clear that because of the relationship with the UK, this has a huge ramification. Mr. Dominic Raab has declared a breach of these Chinese-British treaties on Hong Kong, and you were telling us, Tom, that the UK has also summoned the Chinese ambassador to the Court of St. James over the latest in Hong Kong.
The Chinese ambassador to the United Kingdom there for 10 years now, someone really quite experienced on the London watch, if you will, for Beijing. This story is developing, and we'll have much more on it through the morning, and look to our Hong Kong Bureau for further coverage of this in their early Friday morning. Right now, with our Thursday First Word News, here's Ritika Gupta.
Morning, Tom, Francine. The state of Georgia will conduct a hand recount of ballots for the presidential race. Joe Biden leads President Trump by a slim margin of about 14,000 votes out of roughly 5 million casts. The Trump campaign has alleged there were widespread voting irregularities, but it's offered no proof. President-elect Joe Biden has named a longtime aide Ron Klain to be White House Chief of Staff. Klain played a leading role during the economic and public health crises of the Obama administration. The job is one of the most powerful in Washington. The person is the gatekeeper for the president. Moderna is now poised to take the spotlight on a coronavirus vaccine. The company says its study has accumulated more than 53 infections. That will allow a preliminary analysis of its effectiveness to begin. Moderna didn't predict how long it could take to get an independent monitoring committee to analyze the data. And the International Energy Agency has cut forecasts for global oil demand. New lockdown measures are being imposed around the world, and the agency warns that the vaccine breakthrough won't be enough to quickly revive the markets. Meanwhile, the OPEC Plus alliance may delay an increase in oil production by 3 to 6 months. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Greatly appreciate that. Renminbi now stronger, 6.62 yuan per U.S. dollar. Sterling 131.90 does not play much off of those Hong Kong United Kingdom headlines. We have a mixed market, red and green on the screen. The VIX, though, 23.70 really speaks to the adjustment that's out there. A Treasury yield print after Veterans Day yesterday. Bond market closed. We migrate from 0.97 down to 0.94 yield. I'm going to call that normative within the new range that's out there. Other than that, it's a churn, Francine.
Yeah, it's a churn. If you look at what the markets are looking at, I guess they're trying to assess whether they were overheated amid this deteriorating coronavirus situation in many of the large economies. I'm looking at, of course, some of the treasuries. I'm looking at 10-year in the U.S. at 0.943. You can look at European stocks. They're down a touch, but really one bright spot was Burberry, which rose as much as 5.8% after sales dropped less than expected, and they're now gaining 2.2%, Tom.
We will touch on the pandemic through the morning. The news flow, as you all know, folks, is just extraordinary here as Francine and I and our team look at economics, finance, investment. There's politics, international relations for all of you, and then there's a pandemic. I want to say one single line before we get to Emily Wilkins, and this from our Bloomberg team on the pandemic that's been exhaustive. New York City's average of people testing positive for the virus is approaching the safety threshold. That'll be something to look for Thursday and into Friday. Right now, she gave us wonderful coverage from Camp Biden during that election night and on for the first. I'll speak. I'll get it out. There it is, Emily. I can't talk this morning, Emily. At Camp Biden in Wilmington, Delaware, Emily Wilkins joins us right now, our congressional reporter. Emily, I want to go to the gentleman from Oklahoma, Mr. Langford, saying enough. Mr. Biden needs an intelligence briefing. What will happen today on that matter?
That is a question that we are all waiting and watching for, Tom. I mean, this basically comes down to one government office, the General Services Administration. They are the ones that have to make the formal call whether or not Biden has won this election. And at this point, officials there have said it's not yet clear. But Senator Langford has said that he will step in and intervene by Friday if that formal call has not been made and Biden has yet to get an intelligence briefing. There are other ways for him to get that briefing than having this formal call from this government agency.
Emily, one of the things I see, and I'm speaking of this from a distance, unlike Kevin Cirilli or Emily Wilkins, is there seems to be a lack of communication within the White House. Is there any communication between Capitol Hill and 1600 Pennsylvania Avenue?
I think there is some degree of communication, but it's not like everyone is on the same message. We have already seen about half a dozen senators go ahead and congratulate President-elect Biden, saying that it's time for Republicans to work with him. Obviously, the White House is still holding out that Trump has the potential to win this election through courts and legal battle. Although, Tom, from the lawsuits that we're tracking, it doesn't really seem like there's the potential at this point for any of those lawsuits to overturn the results of the election.
How does this end, Emily? I mean, do we really need to wait for all recounts for the power given to the transition? And what do the American people at large really think of this?
So one of the key dates to keep in mind right now is December 8th. By December 8th, any sort of challenges that need to be heard for what the states have counted need to be in, basically, because then on December 14th is when all of these states officially say, hey, this is how many votes we got. This is how many electoral college delegates will be sending for this particular candidate. It sounds kind of wonky, but those are the two dates to really keep in mind when any sort of Trump's legal challenges will have to either be successful or might no longer matter.
Emily, how long does it take to recount?
It depends on the state. It depends on what materials they have. We've already seen a couple states, including Delaware and Wyoming, come out and officialize and certify their results. But we're seeing other states, including Georgia, go into a recount just because the margins are so narrow that that's actually required under their laws. And so that might take a couple weeks. But once again, every state's got those two same deadlines of December 8th and then December 14th.
Emily, how's Camp Biden doing? I mean, you were knee-deep in this out in Wilmington as well, and I guess they've dispersed. Where have they dispersed to, and what's the mood on a given Thursday morning, 69 days to inauguration?
I mean, the Biden campaign is just barreling ahead here as if everything is official. They have, as you mentioned, named Ron Klain to be chief of staff. Yeah. They're filling other top positions. They've gone ahead and spoken with a number of world leaders who acknowledge that Biden has won this election. And so they're really kind of going forward as though they have won. But as we know here, that they're still not getting certain aspects, including these important daily intelligence briefings, because this one government agency has yet to finalize it.
Well, we will see. Emily Wilkins, thank you so much. Greatly appreciated. Our Bloomberg government congressional reporter. We'll see for more announcements today. There is someone to speak to with wonderful experience on this, including the news breaking out of the United Kingdom on the Chinese ambassador has been asked to speak to the British government. Robert Hormats, next. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I clearly will say that it is unfair to the pro-establishment members that once the 90 members left the Legislative Council, then they will become a rubber stamp of the Hong Kong SAR government. That certainly would not happen.
Don't believe it for a moment. Anyway, she doesn't really run Hong Kong anymore. Hong Kong is run by the Chinese Communist Party and its local boss in Hong Kong.
So-called, what is it, self-decision or whatever. And the other is going to the U.S. to ask them to intervene. These are the two big crimes. So you're not talking about petty dissident views.
Of course, chief executive is the puppet of the central government. So as a result, that is the basic argument why we say today is the end of the one country, two system.
We have to protest against this. This is not even rule by law. This is rule by decree. It's a decree handed down on Hong Kong.
I think Hong Kong will remain sort of a vibrant, dynamic, and in every legislation, I think you will expect different voices.
And we thank all of our Hong Kong News Bureau for absolutely definitive coverage yesterday of this history being made in Hong Kong. Right now, we begin a 4-hour conversation with Robert Hormats. Ambassador Hormats, of course, is public service to President Obama and the nation on economics. Mr. Hormats is definitive on our fiscal structure and what it means for our foreign policy. And right now, we rip up the script with Robert Hormats of Tiedemann Advisors to talk simply about the rights and the liberties of the people of Hong Kong. Bob Hormats, there's the headline from the United Kingdom. They have summoned the Chinese ambassador over Hong Kong legislators. What happens when you summon an ambassador?
Well, normally it's an act of opposition to what has been done, or an insistence on clarification of why it was done, or some other way of figuring out what's going to happen next. The British are in a very difficult position because they have, of course, been for a long time the people who ran Hong Kong. They're the ones who made the deal on Hong Kong. On the other hand, the British have a great deal to lose if relations with Beijing go sour. So they have to walk a very fine line to underscore what they consider to be the proper implementation of the agreement they made with the Chinese years ago when Margaret Thatcher was prime minister. But they also want to make sure that they keep good relations with Beijing because it's critically important. Their financial markets depend heavily on Chinese financial business, and they're selling a lot to China. So this is going to be a very complicated conversation that they're going to have between Beijing and London.
Ambassador Leo, former ambassador to Egypt and now 10 years on the watch in London, Ambassador Hormats, shares in common with you an affinity for the Fletcher School at Tufts University. I believe they have a course there on realpolitik. Great. What is the power structure right now for the United States and the United Kingdom to push back against Beijing?
Well, the fact is we have, and the British have very little leverage on Beijing as to what they do in Hong Kong. And, you know, Carrie Lam is still running Hong Kong, but certainly is very heavily dependent on what is told to her by the authorities in Beijing. This is a very complicated situation. Beijing regards anything foreigners say as intervention in internal affairs in China. And Beijing also wants to keep China as a vibrant economy. It's very important to China that Hong Kong thrive. So they're making their views known and in a very assertive way. On the other hand, they're not going to do anything, and they're going to avoid doing anything that disrupts activity, particularly economic and financial activity in Hong Kong. And the British are going to have to demonstrate for their own publics that they're taking a strong stand. On the other hand, they don't want to disrupt relations with Beijing either. It's very important to them economically, and they still want to preserve influence in the higher levels of the government in Beijing.
Ambassador, will the UK find partners in this? So we were just hearing from the Secretary of State, the Foreign Secretary, Dominic Raab, saying, look, the UK will work with international partners to hold China to its treaty obligations. Who will fight this fight with the UK?
That's a great question and yet to be seen. The reason is that a lot of other countries, first of all, realize that they have very little influence over what China does in Hong Kong these days. And second, they also see China from an economic point of view as vitally important in a world economy that's undergoing great difficulty. They don't want to disrupt economic ties with Beijing or political ties with Beijing. So they have a very fine balancing act that they have to walk. And it's yet to be seen whether a lot of countries who may want to take tougher positions verbally are willing to do anything really that disrupts relations with the authorities in Beijing. And the authorities in Beijing have made it very clear that they don't want other countries to be intervening in this. It's an internal affair for them. And so I'd be very surprised if you get a lot of other countries. Perhaps they may say things, but what they will do that could jeopardize their relations with Beijing, that's another matter, and that's something they're going to have to sort out, and I'm sure they haven't figured it out yet.
Ambassador, was the timing of this very important? This started when China decided to disqualify some Hong Kong legislators because they weren't loyal enough to Beijing. This happened yesterday. Is it significant that it's 3 days after we have, you know, President-elect Biden?
Sure, China does nothing by accident. What they do, they have very strategic thinking in Beijing on time, what they do and when they do it. And I'm sure what they're doing is putting out a message to the United States and other countries, but specifically the United States, saying, we have the authority now in Hong Kong. We have indicated that before. We're taking bolder action to demonstrate that. And if you Americans want to improve relations with Beijing, you will not get involved in this and you will stay out of it. The problem for the United States is, ironically, that you not only have the Hong Kong issue, but you have a lot of Americans on both sides of the aisle saying that we should take tougher positions on China, on a wide range of other issues, Democrats and Republicans. So it's going to be, even if Joe Biden, who I've worked with for years and has had a strong affinity for close relations with China, he's been in a very positive mood. Now he's got pressure internally not to do anything that gets too close to China. So we may go from a sort of a cold peace to a somewhat greater thaw to a degree, but the relations are not going to be the same as they were on Biden, the Biden administration.
Bob Hormats, it's like you're reading our script this morning. We're going to come back and address these timely issues, this bipartisan feeling towards China with Ambassador Hormats, and we'll do that here in a bit. Thrilled that he's with us here this morning with this news out of the United Kingdom. On Balance of Power today, the former governor of the Federal Reserve, the former vice chairman, Daniel Tarullo. This is Bloomberg. Good morning.
Baltimore, you went initially to be an anchor woman, and then didn't quite work out.
Yeah, I got fired.
Well, you
demoted. I was
got demoted, but they didn't. They had a contract, so they didn't say goodbye. Yeah. And then, how did you work out to be on a afternoon show where you actually got to be an interviewer? How did that actually happen?
Well, what happened was this is what I now know with age and perspective, that many times getting demoted is an opportunity for something else to show up, or getting fired. You know, lots of people I've interviewed over the years who have these stories about the best thing that ever happened to you. It puts you in the next best place. I was not a good television reporter. I was too emotional. I was making $22,000 a year, and my best friend Gail, who I met there at the time, she was also working there. She said, "Oh my God, you're 22, making $22,000. Imagine when you're 25." Then you're 30, so I'd be making 60 about now. It'd be good, 62. Once I got demoted, they didn't want to pay out my contract. I was making $25,000 a year. They didn't want to pay me the $25,000, so they kept me on and said, "We'll put you on this talk show just to run out your contract."
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is Bloomberg Surveillance. I'm Rishika Gupta with your Bloomberg Business Flash. China's ByteDance has asked the Trump administration to extend today's deadline to sell its TikTok business in the US. In August, President Trump demanded that the app be spun off because of concern about American users' personal information. TikTok has struck a deal to sell part of its business to Oracle and Walmart, but the deal isn't final. Siemens is forecasting a modest increase for growth in 2021 after a tough year for industrial companies due to the pandemic. Still, Europe's biggest engineering firm warns that some coronavirus-related challenges remain that could cause customer investments to lag behind economic growth. And Wells Fargo is considering whether to sell another of its businesses. Bloomberg's learned the bank is exploring the sale of a unit offering store-branded credit cards. Wells Fargo also is gauging interest in other businesses, such as an asset manager and its student loan portfolio. And that's your latest Bloomberg Business Flash. Tom?
Ritika, thanks so much. Equities, bonds, currencies, commodities right now. Again, a split market, red and green on the screen. Back to normal is how I'd put it. With NASDAQ 100 doing better than the Standard & Poor's and the Dow, the VIX under 24. We'd still make note of that. After bonds not open yesterday, we go from 0.97 down to 0.9423%. We go to 4 digits here for Robert Hormats. And I'd note oil finally flat and not surging. Francine?
Yeah, Tom, the rally so far has added some $6 trillion to global stocks this month, and it's definitely slowing today. I guess investors are selling cyclicals, but going into tech shares perceived as safe amid this deteriorating coronavirus situation. So we'll look at some of the double-dip recession calls out there. I know you and I receive a lot of banknotes, so we'll look at them and bring you, of course, the very latest. I did put Burberry in there, Tom, just because sales were down, but better than expected, so shares are up. But coming up on Bloomberg Markets, an exclusive conversation with Mark Ganzi, Colony Capital Chief Executive Officer. That's coming up in the 1 p.m. in New York. That's 6 p.m. in London. And this is Bloomberg.
sort of technology landscape have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance. Good morning, everyone. Tom Keene in New York, Francine Lacroix in London. Lots going on today. Of course, we're looking at the pandemic, which has really taken a most difficult turn in the United States, the politics of the moment. And in the markets, well, the markets are churning today, is how I'd put it, that important inflation report at 8:30. With us now, Ambassador Hormats with Tiedemann Advisors. Robert Hormats, how do you construct a State Department? You've done this not once, but 2 or 3 times as well. Do you sit around a table with a Rolex and go through it? How do you piece together a State Department in 2020?
Great question. First of all, you have to demonstrate that you, as president, and the new Secretary of State, whoever he or she may be, is paying attention to them. I think the State Department morale for the last several years has not been good. Many of them have felt that they have not really been paid sufficient attention to. The quality of the people in the State Department and the Foreign Service, Civil Service is superb. But in order to really have strong morale, you have to feel you're being listened to. So that's the first thing. The second thing is exactly what you say. You go through the records of people, some of whom have worked on the campaign, but you can't limit it to that. You have to go around and say, who are the most capable people for the key jobs? One key job is who deals with China. Another is who deals with these environmental issues that the administration is going to get more involved in. A third is how do you restore alliance support and American support for alliances. Then there are numerous other issues that have to be dealt with. In which
okay, Bob, I don't mean to interrupt, but this is really, really, really important. I'm going to pick on one country, Ukraine. How do we get the trust of Ukraine back, or name any other country?
Ukraine's a great example, Tom, and that is what you want to do is find someone with a lot of experience in dealing with Ukraine who is trusted on the Hill as someone who knows a lot about Ukraine, but also the Ukrainians as someone who can be an intermediary between their president and their leaders and American leaders. That's going to be very important because that's a signal not just to Ukraine, but to Putin. Putin has to get the signal that the Americans are going to be engaged more extensively in NATO and are not going to sit around while Putin, pushes countries like Ukraine and others around. So whoever deals with Russia, like Mike McFaul in the past, others of that ilk and that quality are going to have to be brought in. And it's a signal of quality and American perseverance and American strength in dealing with a country such as Russia. And Ukraine's a very good example of what you need to do. Someone who knows it and someone who's trusted and someone who's very firm in not allowing Ukraine to be pushed around by Moscow.
Ambassador Hormats, because this is a contested election, does it actually hurt the standing of the U.S. worldwide with some of their allies, but also with countries such as China, such as Russia?
I don't think it necessarily does, depending, of course, on the outcome. And I think the key in the outcome is for these other countries to see that popular opinion, that the voter has seemingly, at least to my mind and to those people counting the votes in various states, the voters have come to a decision. There's certainly a lot of people who don't agree with that decision. But in the long run, the strength of American democracy, based on the will of the voters, is going to be seen not only as a signal here, but in other parts of the world. They have long since.
Okay, ladies and gentlemen, as you can see, I'm placing a stop on profit for British pound. The price I'm looking for 131.3. 822 802 792. Okay? Stop placed, it will give us nice £500 in profit. 131,792.
It wants to be a leader. It has to be doing it by what happens internally with respect to elections and with respect to dealing with issues that the American people care about. And that's going to be the example. George Kennan, when he was talking about how do you deal with the Soviet Union, this was decades ago, said, make your own system work better and your leadership abroad will be that much easier.
So, well, first of all, I think we do have a scoop actually from Axios saying that President Trump has told friends that he wants to start a digital media company to clobber Fox News. I don't know whether this will have repercussions outside of the U.S., but given what you've just explained to us, what is the most important job that Joe Biden has to fulfill in his administration?
Well, I think he has to do two things. One, he has to demonstrate that the American system works for everyone. And he made an interesting point. He wants to be president not just for the people who voted for him, but for the people who didn't vote for him. And I think pulling the American system together and developing a consensus, at least on a few issues, and getting some legislation through is extremely important. Showing that he can be president for a wide range of people and that he can get results from his presidency, which means working with the Congress on these issues. And he actually in the past did have a good relationship with Mitch McConnell when he was vice president. I remember many meetings where he and McConnell did get together. So we'll see if this can be replicated. It won't be as easy because it's 5 years later, but it's doable. The second, I think, is to demonstrate that America once again wants to be the leader of the free world. And that means working with friends, working with allies, consulting with friends, consulting with allies. That's, I think, a critical element too. I think it's critical at home to demonstrate that we have friends abroad who are working with us, but it's critical abroad to demonstrate that America really wants to work with the leader on environmental issues, on supporting democratic liberal values, liberal with a small L. And I think these are the kinds of things that he's going to have to do. They're basic values.
Bob, we're going to have to leave it there. Robert Hormats, thank you so much. Ambassador Hormats, of course, with his service to the nation with President Obama and a few other presidents as well. In New York City, with our First Word News, here's Ritika Gupta.
Thanks, Tom. President Trump suffered 2 setbacks as he tried to claim victory in the state of Arizona. The state's Republican Attorney General told Fox Business it was highly unlikely the president would catch up when remaining ballots are counted. He also said he has found no evidence of widespread fraud that the Trump campaign has alleged. The American pandemic's longest increase in coronavirus infections appears poised to get even longer. The nationwide rise in cases is now in its 9th week. Authorities reported more than 145,000 new cases yesterday, an all-time high, and the 7-day average for deaths has climbed above 1,000 for the first time since August. The British economy expanded the most on record in the third quarter. Growth surged 15.5% after falling almost 20% in the second quarter. Still, the recovery is less than any of its G7 peers. Meanwhile, there's been an increase in coronavirus cases, and British output in September was the worst since April. China and 14 other Asia-Pacific nations are close to a deal on the world's largest free trade agreement. It could be completed this weekend. The partnership also includes Japan, Australia, and New Zealand. It would be the culmination of Beijing's decade-long quest for great economic integration. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thank you so much. Now, joining us next week for Bloomberg's New Economy Forum, we have a great lineup, of course, of newsmakers, policymakers, heads of state. You can watch all of that live on Bloomberg.com, but also follow us on our social channels, Twitter and Facebook. This is Bloomberg.
Okay, as you can see, we closed position on British pound at 131.792. We got £500 in profit.
And how long has it been since Gina Martin Adams joined us with Bloomberg Intelligence and, of course, our chief equity strategist? What we've done is reverted from the mean. That was quite a move higher, Gina, to say the least. What is the official line that you have on the sustainability of Dow 29,157?
Well, look, I think a lot of what we've experienced over the last week is just a reversal of what we had pre-election. We had a pretty significant meltdown in the pre-election week. We recovered in election week, and now we're right back about where we started. If you look at the S&P 500, it's testing those September peaks. Since September, we've been in sort of a churn, a lot of pre-election nervousness, but also a rotation. Our view is that rotation continues, creating a lot of churn for the equity market, but ultimately what pulls the market out of this malaise and out of this sideways trend is probably an improvement in earnings growth into 2021. I know there's a lot of uncertainty with respect to that earnings growth, if we can get an economic recovery, but when you look out at where we're going to be in 6 months, 12 months time, it seems inevitable that we're going to be growing at least a little bit faster than we are today, and that's probably what's going to propel the equity market a little bit higher.
I look, Gina, at the ballet here, and what I remember is you absolutely nailed the belief in an earnings recovery. Does any of this gyration have anything to do with the dynamics of earnings or up the income statement to the guesstimates of revenue?
I think it does. I mean, I know that a lot of people think it's all about politics right now, but something happened in September, and what happened